So, L2ST trading with the DOM, the depth of market, otherwise known as the dome. Guys, as I said, we're not using a PowerPoint presentation today. I'm using a Adobe Flash presentation, which I'll put together. I think it's pretty nice, a little bit different, and you know we like to be different at L2ST. So, this will be a nice addition to the past webinars, which we've already covered on market delta, auction theory. So you guys that have attended our past webinars and seminars, this is sort of an ongoing thing. We started doing regular trading room members only webinars back in November for you guys that have missed those. If you're room members now, we have got an archive, so you can go back and watch those. Now, the last one we did in November, just to give you guys an idea of what we've covered so far, was basically focusing on trade execution, trade management using the market delta footprints. Now, we took that a little bit further in the webinar that we did at the end of January, and we applied some slightly different setups. We actually gave you some more setups, and that sort of took that to the next level, and we focused a little bit more so on trade management as well, rather than just trade execution. And we also did a playback that we played back on crude oil, and we slowed it down and paused it, showing you what kind of information you should be looking for entries and exits. But that was all initiating activity. So what we are going to focus on today is a little bit more of how to read responsive trade. Traders that are being responsive at key levels for cutting off actual initiated moves. So when a initiated move actually comes to an end, what cuts it off is your resting passive limit orders that are waiting at a particular level as resting bids and offers, waiting to cut off the current initiating supply and demand. The initiating supply and demand is known as what we would class as behaviorally when sellers are initiating aggressive shorts by hitting the buyer's bids. Okay, so they want to get into the market right now, so they want to. I mean, in effect, it will be the same as a market order. They're actually hitting the bid rather than putting in an offer on the ask. So they want to get in right now. So aggressive trade usually wants to get in right now, quickly, and initiate a move. So they're trying to move the market with those trades. Okay, so those trades you'll often find the supply will be hitting the bids, more volume hitting the bids, and demand will be lifting the offers. Right, and that's what we talked about more so in the last few webinars, and that's more of the initiating trade. Now, before the initiation takes place, and these traders actually pick out a move in order to enforce a more directional move, they actually look for setups at first to be cut off, or trade directional moves to initially be cut off. So one of the things we would do is look at a key level for maybe a drive higher to be cut off at resistance, or a drive lower where initiated sellers are in control to show that maybe the selling is getting cut off at support. So, you know, we would look for responsive activity at those levels. Now, what we're going to be focusing on today is using the dome, the depth of market, to read that information. I will also be going through the market data footprints as well, and how we can put this all together. So sort of moving on from the last couple of webinars. You can access the archives using the links that I sent you in the email, Simon Korshoff. When you join the trading room, there's an email that you receive that states you should read this very carefully in block capitals in bright red. Most people don't read it carefully, and that's why we get these kind of questions. But yeah, if you read it, you'll find that there's actually links at the bottom in that email to give you access to those webinars. right? So when you join the trading room, you actually get a welcome email with those links in there, okay? If you joined recently anyway. Yeah, it does help if you read the instructions, guys. We've had a bit of that today as well, but we won't go there right now. I'll just say there's usually some detail in these emails, so read every single word. There's a reason why that information is in there. It's there to be read, not necessarily to be ignored. You know, you might miss some key information. I don't send out crap. It's always stuff that you need to know. So make sure you read them. Yeah, maybe we'll have a webinar on how to read instructions. Yeah, absolutely. That'd be a good idea, Jim. Right, anyway. Hey, Richard, thanks for joining in. For you guys that have just joined in, we've really just started now, so we've started off a little bit late, guys. So, so just be talking about what we covered in the last few webinars, and just explaining why we're moving on to what we're moving on to, really. And this is really sort of looking at resting bids and offers. Now, this is obviously optional. Right? This is optional. Don't worry about it, Mark. You don't need to do that. No, it wasn't just you, so don't worry. It's nothing to. It's in the past. Let it go. Right? Let's move on. The past is. I often say the past is a place for reference, not a place for residency. So let's just move on. It's happened. Okay, we're in the now. Let's just move on with the webinar. Don't worry about it, guys. Let's just get going. Sometimes I just need to. I need to just get it out so I can let it go. I don't like to repress emotions. So it's always best for me to just release and let go. So that's why I was letting my mouth run a little bit earlier. So one of my techniques, my NLP techniques for releasing some emotions. It's one of the best ones. I'll get a punch bag. That always helps. Right, okay. So guys, hopefully you're all settled. Let's do a quick little technique. I think I need it as well. So I did this the other day, real quick technique. I actually got this from the Silver Method, something that Brian shared with me. It's a really old technique, and there's many different methods, but one of the techniques that they use to get you into the alpha state, which is basically just before you go into theta and delta. For you guys that are not familiar with brainwave states, you'll actually hear me talking about this in the trading room and talking about getting into different states of the mind. And I always talk about getting into the theta state, but you know, you usually have to sort of go through alpha to get to theta. Now, alpha is a more relaxed state. We generally spend most of our time in beta, basically our brainwaves fire at different cycles per second, and generally theta is sort of 7 to 4 cycles per second, and alpha is just above that level, up to around 10 cycles per second. And we usually spend most of our time, you know, having very sort of rapid thoughts, and that's why we have a lot of noise in our minds, because we spend most of our time in beta. Whereas if you get into alpha, it's a great learning state and also a great performance state, because you still say alert, but yet you still say you are still relaxed, and you are actually less prone to negative emotions and negative thoughts and negative feelings. So let's just quickly start with an exercise, guys. I'd like to sometimes start with our webinars with a little meditation. So let's just first just start with a quick exercise that takes you into the alpha, and then we'll do a short meditation. So if you just get comfortable, you can be sitting, you can be standing, it's entirely up to you. What we like to do is close our eyes. Okay, so it's best to close your eyes, get relaxed, make sure any tension that you may have has been let go. Okay, relax your body, relax your fingers, relax your arms, relax your shoulders, relax your legs, relax your thighs, relax your feet. Okay, and as you're relaxed now, what you need to do, I want you to breathe in. I'm going to ask you to breathe in, okay, 3 times. Okay, you're going to breathe in 3 times and breathe out 3 times. And as you breathe in, I want you to visualize on the screen of your mind, if you was to imagine maybe like a cinema screen within the mind. So if you close your eyes, maybe you can just visualize like a cinema screen. Just imagine this is the screen of the mind. And what I want you to do as you breathe in, take a deep breath. Make sure you breathe in right through the stomach, but make sure you feel the diaphragm lift and actually bring in the oxygen into your lungs. Remember, there is actually nothing within your stomach. Although we talk about breathing with the stomach, there's actually nothing within your stomach that can actually absorb oxygen. And we need to absorb oxygen, okay, to stay energized. So when you breathe in, breathe deeply, but bring it in through your stomach. Notice your diaphragm lifts, and then that breath goes into your chest, into your lungs, okay, and your lungs expand. And take a real deep breath. And as you breathe out, visualize the number 3 on the screen of the mind. And do this 3 times. Okay, now do exactly the same, but visualize the number 2 as you breathe out. Okay, now as you breathe in this time and breathe out, visualize the number 1. Just notice straight away you might feel that your mind is clearer of any thoughts. You may feel a little bit more relaxed, more clear-minded, a little bit more energized even. And just notice any feelings, any sensations that you have right now. Just stay within, okay, and just notice any feelings that you may have that may still be present, any thoughts that you may still have. And just notice them, just observe them. Don't identify with them, just watch them. Okay, if they was to pass by on the screen of the mind that we talked about, just notice them as thoughts or bubbles of thoughts just scrolling by or just floating by. And just notice as you observe them, you don't identify, okay? You don't really identify with these thoughts. You don't become too integrated with that thought. Just watch it, just observe it, and just notice as you observe it, it just disappears. And if another thought comes in, just watch it, okay? Just observe, do not identify with it. Just watch the thought and just watch it drop away. If any feelings arise, bring your attention to that feeling. Notice where that feeling is from, how it feels. Just notice that as you bring your attention to that feeling, it drops. Whether it's positive, negative, doesn't really matter. Okay, any feeling, any sensations, any thoughts, just let them drop one by one by bringing your attention to them. Good. Now, any sounds that you may hear, notice any sounds within the room, maybe sounds internally, maybe you can hear some sounds within. Any sounds, maybe you can hear your internal dialogue, your internal voice. Okay, maybe there's a negative talk, like a negative commentator that you can hear right now. Okay, just watch this commentator. Just notice what it's saying. Just observe, don't identify with it. Maybe it's telling you, why are you doing this technique? Maybe it's telling you, what are you doing here? Whatever it's saying. Maybe it's just saying, get on with it. Okay? Whatever it's saying, just watch it, observe it, just notice it. Just notice where that sound, or even feelings for that sound may come from, that internal dialogue. Notice any sounds around the room that you're in, to bring your attention outside of yourself. So you're just shifting your awareness. And what we're going to do is just expand your awareness now. Maybe you can just start to listen out for any sounds outside of the room, outside of the building you're in. Maybe the traffic passing by. Maybe you can hear people talking. Maybe it's just silent. Maybe it's just quiet. Maybe you can hear some birds chirping. Whatever you may hear outside of the building, just listen to it, observe, witness. Just notice as you bring your attention outside that your awareness expands. Good. Now, with this expanded awareness, what I want you to do is just come back within and I'm just going to bring you out of this state. The count from 5 down to 1. Okay, 5. You're feeling more relaxed, more alert, more aware. Number 4. Feeling even more relaxed, even more aware, silent. 3. Feeling more and more relaxed, feeling more and more alert and aware. 2 and 1. Come back into the room. Okay, good. You guys might feel a little bit more alert, a little bit more, well, different, let's just say. Everybody's going to be different in how they feel, but hopefully you feel a little bit more positive than you did earlier. Right, so guys, you should now be able to see the sounds. Sorry, you should be able to see the visuals. You should be able to hear me okay. So let's get going. So you should be able to see the presentation slide, the front page, the title page. Okay, everybody feeling okay? Good, let's go. Right, okay, so what we're going to be talking about today is trading with the depth of market, for you guys that missed it earlier, and we're going to be talking about using the dome for more so for sort of scalp type entries. So you can use this also for bigger trades as well, for getting into trades with less risk, and therefore also high probability of potential reward. So what we're looking at is better trade execution and timing through the use of trade execution tools such as market data footprints, the time and sales, and the depth of market. So we're just moving on from previous webinars, but you don't necessarily have to have attended the previous webinars to put this to use. It will still make a hell of a lot of sense to you, but if you have attended the previous seminars and webinars that we did on trade execution, trade management, you will see how nicely this fits in with what we've already covered. So let's get going. Right. Let's get going. Guys, okay, I warn you, this presentation might make you feel a little bit dizzy. It does spin around, but it's going to keep your attention, okay? Trying to move to a new style of presentations rather than the old school PowerPoint presentations, which can be a little bit boring. So I'm hoping you enjoy the presentation, but just be aware you might get a little bit dizzy to spin around quite a little bit. Okay, cool. Let's go. Understanding the dome, the depth of market. Now, the reason why we look at the dome is really to read resting supply and demand. Now, as I said earlier, there's two kinds of order flow that we really need to keep an eye on. And firstly, it's resting supply and demand, which actually cuts off initiating moves. And secondly, we have initiating activity, which actually drives the move further. Now, what we want to do is read what can possibly cut off a current directional move as we're testing a key support or resistance level. As we go on today, I will be talking about some of the activity we look for on the dome, the depth of market, and I will be talking about spoofing activity, how to read it, what to look for. I will be looking at 3 main setups that I like to use, which is in line with everything else that we've taught you guys. So for you guys that haven't covered that yet, it will still make sense because I'm going to show you some examples. And once we get through those setups, then we'll bring up the depth of market and the dome, and we'll actually go through some real trades together. Okay, so, and I'll show you some of the things you should do, some of the things you shouldn't do. Hopefully we'll get some good activity. So what's the time right now? Yeah, I want to try and get into that before the lunch break. So let's get going, guys. So resting supply and demand. Let's have a look at what that is and what it means. So first we need to understand what we're looking at and what it means before we can understand what to do with it, right? Okay, pre-trade supply. Some of you guys have covered this information before, so just bear with us for some of the guys that haven't covered this information before. So this is quite basic, but definitely important for us to just recap. The volume of resting offers that are available at the current asking price, okay, or the offer. So the asking price is often known as the offer or the ask price, and above. Okay, so these are resting offers. They're not yet filled. Okay. They exist as sell orders waiting to fulfill the current buyer's demand, willing to lift the offer. Or, on the other side of this, they exist in order to cut off these buyers, okay, if they are sufficient in quantity. So what does that mean? Well, basically it means that, for example, if we're coming into a key resistance level, there will generally be some offers there waiting as passive trade. Sellers actually with resting offers there waiting to get into the market with resting limit orders, okay, that are not necessarily waiting for the market to get there and actually move off that level firstly. They're actually just putting an order there because they're expecting the market to move from that level when it gets there. Okay, and you guys can do the same as well. We don't actually recommend playing purely off levels. We like to see if that level is likely to hold by looking at this information and then making a decision. But there are times when we will use this, which I'll talk about later, which is in really small ranges. So we would just put, you know, orders, limit orders at particular levels to get into trade, but not something we want to do as longer time frame traders so much. We really want to look for initiating activity, looking for the bigger moves. So this is more for sort of scalping and looking for short-term action initially, but you can use it for executing initially and then looking for follow-through afterwards. And I'll show you how to do that a little bit later. So if you think of this as, you know, on your dome, the depth of market, you'll often see these offers on the current ask, okay, or above. Okay, but remember these trades are just sitting there. They're resting bids, resting offers. Sorry, they're not actually filled yet. They can actually exist there to. They can actually exist there as sell orders, okay, to fulfill the current buyer's demand. So buyers obviously willing to lift the offer will have to lift some offers that are already there, right? Okay, it's a zero-sum game. Everybody agree? Okay, everybody understand this? Is there anybody that's not understanding what I'm talking about here? Okay, for a buyer, for example, if we wanted to buy the market right now, say for example, crude oils is at 86.50s, okay, and we want to buy the 86.50s, okay, and it's offer at 86.50s, okay, the asking price at 86.50s. Now there has to be something on offer there for us to buy it, right? Now, if there's only 2 on the offer and we want to buy 10, okay, we'll only be able to buy 2 there, okay? So, you know, we can only buy what's on offer, right? So trading is a zero-sum game. Now, these offers, now if they are sufficient in quantity, okay, they will fulfill that that demand that is willing to lift those offers. Okay, but if those offers are sufficient in quantity at such a level that there are not enough buyers to actually lift all those offers, that offer then becomes resistance. Does everybody understand that? Okay, so that's how it can cut off an initiating move towards the upside. So if we get into a level and the market cannot lift all the offers at that price, okay, it will then down tick. Okay, if we cannot lift all the offers at that price, okay, nobody's willing to lift those offers. If there's not enough demand, it will then down tick, okay, and then start working the bid, okay. and it will test that offer again. I mean, if somebody wants to lift the offer there, okay, then fair enough, we'll move back there. But if nobody wants to lift the offer there, okay, what will happen? That market will use that as resistance. So that's initially the first phase before the market gets cut off and starts to move back down, right? So we need to understand that before we can actually look at how to read this, right? Everybody understand? Good. Okay, this is all basic stuff. Right, now pre-trade demand. Okay, now this is just the other side of the table, really. Okay, this is the volume of resting bids that are available in the queue, okay, not yet filled, at the current bid and below. These exist as buy orders to fulfill the orders of sellers willing to hit the bid. So sellers obviously want to get into the market right now, obviously will have to hit the bid. Okay, if they put in an offer, they'll have to wait for somebody to come and lift their offer, right? So if they want to get in right now, and if we want to short the market right now, we think it's going to go right now, we would have to hit the bid, right? Now, if we think it might uptick a couple of ticks, you know, we might put in an offer, right? But if we think we're going to actually, we need to get in right now because the market's going to move right now, we will have to hit the bid. So that's why sometimes you will have to actually, in a way, in effect, it's like a market order. You hit a market order. I don't actually hit the buy and sell buttons myself. I actually will hit the bid on the dome itself, which I'll show you later, or put in an offer myself. Okay, so if I want to get short the market, I will actually hit the bid if I think it's about to go right now. But if I think it's going to stay there for a few more seconds, or maybe even uptick a couple of ticks, then I'll probably put in an offer. Okay, you guys understand what I mean? Right? Good. Now, if there is resting bids there, okay, at the current bid, now we could actually sell into that. Okay, now for example, but if we wanted to sell like 15 and there's only like 5 there, okay, we obviously cannot fill all of it. That's generally where, if you put in a market order, then you'll get slippage. Okay, it will go down to the next price and then fill the rest of your position there. So that's how you get slippage. Okay, because if there's not enough there, you'll get slippage. So, you know, if on the resting bid there's only maybe 5 and you want to get 15 into that market, now you sell at market, you know, the likelihood is sometimes you do get positive slippage, sometimes you get negative slippage. Sometimes that market may come up a little bit and actually fill you on the next price, okay, which is a little bit higher. But sometimes it's going to move down, so you're going to get a worse price. Now, I generally like to use limit orders. I actually like to I either hit the bid, okay, or lift the offer. Myself on the actual depth of market, which I'll show you later, okay, but rather than actually click market buy or sell. Now, the other thing is you can put an offer, okay, or a limit order on the bid as well, but I'll show you when you know, times we'll probably get some examples when you can do that and when you shouldn't do it. It's always worthwhile trying to do that so you can save yourself the price of the spread between the bid and the ask, because usually that 1 tick spread. Sometimes the bid ask spread does widen, which I'll talk about later as well, and you can actually position yourself within the bid ask spread. Okay, and that way you get a feel, but you can actually position yourself in the bid ask spread, what I'll talk about later, and you sort of make back that 1 tick. So what we're talking about here is pre-trade demand. Now, these exist as buy orders to fulfill those orders, okay, if sellers that willing to hit the bid. So if we want to hit the bid, okay, somebody will obviously be waiting there on the current bid to buy it from us, okay, so that has to be there, otherwise we wouldn't be able to sell that. So this is a zero-sum game, okay, so you've got to remember that, you know, whenever you're selling, somebody else is buying, okay, whenever you're buying, somebody else is selling. There's always somebody else on the other side. A lot of the time, the locals will take the other side, okay. Some people say, you know, in some markets, you know, you can think of it as a market maker. In stocks, you know, they think that, you know, it's the market makers. They take the other side. Okay, I mean, in futures, obviously, we don't have market makers, but we have, you know, guys that sort of similar sort of role. You know, the role of the market maker, sorry, the local is similar in a way. Okay, they are there to provide liquidity. So, remember, these resting bids may actually also cut off the initiating move towards the downside. So we may have initiated sellers, okay, in control of the current market, but say for example only 20 hit the bid, and we've got 200 sitting there on the current bid. Okay, now if there's 200 sitting on the bid and only 20 sellers are willing to hit the bid, okay, that means that selling has now got cut off. You see what I mean? Now, what might happen as well, we see this quite often in the trading room, is sometimes you'll actually see, you know, a lot of volume actually hitting into a support level. Okay, so it looks like initiated trade towards downside, which it is. Sellers are hitting into those bids, but what happens is all of those sellers get trapped. Okay, so for example, like 300 sellers hit into a support level on crude oil, and all of a sudden get trapped, but they are not able to actually get through that level. So what happens is they actually keep selling into that support. Okay, so initiated sellers keep selling into that support, but what happens is the market actually bases out, and this is the B formation that we often talk about. Okay, and it's a bottoming formation, and then we also talk about the P formation, which is a peaking formation. Okay, a peaking formation. So it's a nice way to remember it: a B formation for a bottoming formation, a P formation for a peaking formation. For you guys that are new to this on the footprints, I talked about this in the last webinar, but I'll go through this again a little bit later when we bring up the actual charts. Now, what you will see is that loads of sellers will be hitting the bids, okay, but they are not able to cause this market to move lower. So what's happening is there is a sufficient quantity of buyers, okay, waiting there, okay, to actually buy from these sellers. So what's happening is, although it looks like sellers are initiating shorts, because of the support level, we can actually anticipate those buyers are actually putting in limit orders there, okay, on the current bid to actually buy from these sellers in order to cut off that move. Does everybody understand that? So that's why sometimes that's why I say always be careful when you're looking at initiating activity into support, okay, towards the downside, and be careful when you're looking for initiating activity towards the upside, okay, into resistance. That's why we don't really use sort of market data footprints so much for breakout trades, because a lot of the time these breakout traders are the ones that get trapped at these highs and lows, right? And what cuts them off is these resting bids and offers. And what we want to do when we're looking at trading the dome is really understand this really well, so that we can actually look for this happening. So one of the things we want to see is sufficient quantity, so usually a large enough quantity there showing on the resting bids and offers to cut off the current move. So that's always a heads up. So sometimes I'd say there's support or resistance on the dome, okay, on the depth of market, rather than actually on the chart. So it's not actually a Fibonacci level. It's not actually a pivot point or market profile level. It's actually real support and resistance based upon market, the market's order flow. Okay, so resting bids and offers. That is real, true supply and demand. I mean, that is real, true support and resistance. Okay, real, true support and resistance is actually provided by the resting bids and offers, not by a line on your chart. Although we have some really good levels that provide really good support and resistance, like our Fibonacci 127.2, 161 point extensions, our market profile levels. They're all good levels to be watching. But obviously, in real time, in the present moment, I always say all support and resistance is 50-50. Okay, in the present moment. Why? Because it doesn't matter if in the past it's been proven to work 90% of the time. The fact of the matter is, in the present moment, there's a 50-50 chance that it's going to break or it's going to hold. Okay, really think about that. Okay, the reason it is because in the present moment, the market really doesn't give a shit about what happened in the past. Okay, it doesn't. The only thing that really matters, okay, is what's happening right now. Who's willing to actually cut off that supply and demand, okay, at that particular level. Now, if nobody is willing to cut off that move into that level, then that market will go through it, even if it's been proven to work 99.9% of the time. So the fact of the matter is, in that present moment, is there not always a chance that it's going to break? No level holds 100% of the time, right? So now, for me, there's only two outcomes there. It's either going to hold or it's going to break. That's 50-50, right? In that present moment. Right? The market doesn't move based upon what's happened in the past, although the past can give us some good reference levels, okay? And it could give us some key patterns and things to look for, that, for example, chart patterns and things which we see happening again and again and again. However, in the present moment, what's actually going to happen right now and when that trade's actually going to move is only going to be determined in the present moment, right? So you guys been around in the trading room for some time will understand that's the way that you should be looking at each level. You need to think of it as it's a 50% chance going to hold, it's a 50% chance going to break. Now, I need to find some evidence that it's going to hold before I take the trade. And if you approach the level in that way, and any level, you'll always be looking for an edge, okay? Otherwise, your edge is just a line on a chart, okay? And that, in this game, just doesn't cut it. And if you you can be my guest and do that, and let me know how you get on. Okay, I'll be very interested to know. Right. Yep, that's right, Mark. Yep, the B formation. Yeah, generally seems to be a pause before the trap reaction. Yep, that's right. Absolutely. That pause has a different length of time in different markets. Absolutely, you're absolutely right there. Yeah, it's absolutely important to remember that. I mean, on crude oil, some of these more volatile markets, the market can move fairly quickly off these levels within seconds. But some, you know, like the S&P, it might take minutes. Okay, even longer. Okay, so it depends on which market you're trading as well. Yeah, definitely. Everybody following me so far? Any questions, guys, at this moment in time? So everybody understand what resting bids and offers are, because I don't want to move on before you guys understand this, right? Okay, good. So how do we read pre-trade supply and demand? Well, we use the tool known as the depth of market. There is ways to use the market delta footprints to watch for selling and buying getting cut off, which I often talk about as well. We can actually see how many buyers or sellers actually lifted off or hit into a bid. Obviously, we can only see real trade on market delta, trade that has actually taken place. There is a bid-ask tool, but that is delayed. Okay, the bid-ask tool can be useful to start off with, but that's only the inside bid and ask. Okay, what we need to keep we need to keep a lookout on more than just the inside bid and ask, right? So what we need to watch is the dome, otherwise known as the depth of market. Is anybody here not familiar with the dome, the depth of market? Okay, it's sometimes known as a price ladder. Everybody familiar with it? Good. Right. A typical trading platform can display a depth of 10 prices, 5 at the bid and below, and 5 at the offer and above. Some people will call this tiers. Okay, 5 tiers below the current bid and ask. Below the current bid, and 5 tiers above the current ask. Now, some platforms now do offer a depth of 20 prices, so you'll actually have the inside bid and ask, obviously, and then you see 10 prices below the current bid and 10 prices above the current offer. Now, for example, in Infinity Futures, their Transact platform, their Infinity AT platform, now actually supports 10 prices, okay, wide. So that's actually pretty useful. Sometimes you can see resting bids and offers. I mean, I've actually enjoyed using it. Now, you can also get this on Xtrader, TT, when it's been around for some time. You can actually choose what kind of depth you want to look at. And I think many other platforms probably will be introducing it as well. There's a few platforms I think you can actually do that on. I'm not sure about NinjaTrader. I think you can. I think NinjaTrader, I have seen it in the past. I think it might depend on which data vendor you're using or which broker you're with. But I'm pretty sure it does. And anybody can anybody confirm that, or do you only have the 5 prices? I'm not quite sure about Ninja. I used to use Ninja quite a while back, but I no longer use NinjaTrader. Okay, so one of the things we need to focus on, okay, is the columns. Now, the columns, for you guys that are not familiar with this, okay, I'll just go through this quickly. The number on the right column displays the resting offers, and the number on the left, okay, shows you the resting bids. They are just resting orders. So remember, they are not real orders, so they can be pulled as well. So, you know, sometimes we'll actually find, I'll talk about this in a while, spoofing. You know, we'll actually find, like 100 lot, 200 lots, for example, on crude oil. Sometimes we'll actually see something that's really, really out of line, and we see like 1,500 show up on the offer and the bid, even on crude oil. But, you know, generally you only see sort of 40s, 50s, 60 sort of work in the bids and offers. Now, the price column is usually in the middle. Let me just show you a dome here quickly so you guys can see this. This is crude oil. Right, okay, this is just the simulator. Now, what we can see here is the price in the middle. Okay, the resting bids on the offer. You see it's moving really quickly. Okay, so the resting bid quantity here on the left, you can see this dome actually has a depth of 10. Price is lower. Okay, the only annoying thing with Infinity AT's platform is that when you actually hover over the current bid and ask, okay, when you put your mouse over it, it actually disappears. You can see this market's trying to push down. See the offer's a little bit heavier here, okay, trying to come down. Okay, so we'll talk about that in a little while anyway. But one of the things I like to do on Infinity's platform is right click here, and I'll use Smart Center, and this way you can actually watch the market actually move up and down the actual ladder. And as it gets to the bottom of the ladder, it automatically starts to sort of recenter itself. So I don't like to use Auto Center. So if anybody has Auto Center, with NinjaTrader, that's why most people like to use a static dome rather than dynamic dome, because you actually have this feature. Most trading platforms allow for you to take the auto centering off. Some of them don't though, but it's a good feature to, if you're going to trade off the dome, it's a good way. If you're trading off the dome alone, which you can do, and I'll show you some ways you can do that in a little while, where we just maybe won't use a chart and just sort of show you some of the things that we can look for. Now look at that. I mean, 80.88. You can see there's 100 lot just showing there. Notice, I mean, it just showed, but it's gone. But look, we're going to test it now. Okay, look what happened. It's no longer there. There's only 24 there. But what happens on crude oil? Quite often, we like to test those areas. Okay, and you'll often find, even though it just showed there, look what's happened. The market's just moved into 80.88. So it's already moved, 3 ticks, 4 ticks off it. Okay, now look, what's happening? Only thing what just happened is on crude oil, 100 lot just showed there at the 88. So it's not even there anymore. But if you want to scalp like 5 ticks at a time on crude oil, you can actually go on that. Okay, I've made some real decent money just doing that. I mean, you can see 114 showing at 96s now. So the market, it's not there. So somebody's spoofing it. But what happens is the market is curious. Okay, market participants are curious. They want to know if it's real. So they're probably trying to take it up to that level. So these are some of the things you want to look at. Now, the last trade column actually just shows you. I'll just show you here. The numbers on the right column displays the resting offers. That's what we've been through. Okay, there's usually a column to show you the last trade and the quantity at either side of the current bid and the ask. Okay, so now we can actually see on the last trade column, okay, whether we work in the current bid or the ask or inside the current bid and the ask. Now, what we can see here, there's sometimes you can see the bid-ask spread actually widens on crude oil. Okay, it becomes 2 ticks wide. That's when you can usually sort of make back the spread, because you can actually position yourself inside the bid-ask. Okay, so you can actually get in and actually make back the spread there. So that's something I don't want to go too much into today, but there's a lot of things you can do with sort of faster markets. You can't really do that on the S&P. The S&P bid-ask spread would usually be 1 tick wide. You don't usually see the bid-ask spread sort of widen like that. But you can often position yourself inside the bid-ask spread, and you make back a tick straight away. Right. Okay. So one of the things we'll actually see here is moving really quickly, as you can see. When this last trade will only either be at the current ask or at the current bid, right, guys? You can see this, right? It will only either be at the current ask or at the current bid, right? Now, what you can see here, the first number you see, okay, not in the bracket, okay, the number outside of the bracket is the last trade, okay, the quantity of the last trade at that price. Okay, so you can see a 1 lot just hit the bid, 6 lot just hit the bid, okay, 7 lot just hit the bid, so they're hitting the bids, right? Now, what we also see is a number in brackets. Actually, I think I've just got that the way around. Okay, the bracket is the last trade that's taken place. Okay, and the actual number outside of the bracket is the accumulation of all those trades at that bid and offer. That's a new feature in Infinity's platform. That's why I'm not too familiar with it. Usually, on most platforms you'll just have the last trade, but in Infinity, this is a pre-release version of their new platform with the 10 wide depth. Okay, now look at the 88s. You can see that 100 lot showed here. Look where that market's moved to already. Just from looking at that on the dome, we didn't even need to look at the price chart, right? So as soon as we got to 89s, we would have leaned on that 88 and bought the 89s. Do you guys see what happened? Look where we are already. We're at the 04s. And as I said, there was an offer at the 98s. The market participants will be curious to test that. So what happened is they were curious to test it, and they went straight through it. Okay, so not only did we see someone show some bids at 88s that didn't stick, okay, the market came down to test it and actually held it. right? So that's one of the techniques that I look for on the dome. Does everybody understand what just happened there? I'm going to go into this a little bit more detail. Does everybody follow me? Okay, but you can see from 88s, if you bought the 89s, you're already all the way up to 02s. Not a bad scalp, just based upon that. Now, it's not always going to work as well as that, but you'll be surprised at how often this technique works alone, without any charts, nothing. Right, okay, thanks, Richard. One person gets it. Is anybody else actually getting this right now? Come on, guys. One of the things that gets me more than anything is non-participation. Okay, you're in the room, be in the room. Okay? Right, I want participation throughout this whole event. Good. Phil, it's too fast. How do you react to it? I'll show you later, actually. It's really easy. You just got to be quick yourself. Simple as that. If the market's fast, you got to be fast. If you're too slow for that market, always best to move to another market. That's all. Simple as that. ES, different story on the ES, Flemish, and I'll talk about that. ES, it doesn't work as well, and I'll explain that why. And other markets that are as volatile, and it used to be probably if you was trading this kind of strategy, maybe sort of 10 years ago, maybe 5 or 6 years ago, you'll do very well. I mean, I know guys that made millions trading this particular strategy on Eurobonds and some very sort of liquid markets. But you know, I know one guy that made millions over 3 or 4 years and gave it all back in 1 year. Okay, purely because that particular market failed to sort of work for these strategies. But you know, he failed to adapt. But this is why you know, we have to teach you how to do it properly. Okay, so there's certain markets that this will work on, some markets it won't. So you can still do this. Crude oil is one of the best to do it on. The DAX. So some of the best markets for me, the DAX, crude oil, and also you can do it on the euro. The euro is good. The Dow, the Russell. Now they don't move as quickly, but when they're quite volatile and they're moving real quick, you'll often see something like this. But crude oil and the DAX is the favorites for me. That's why I focus on those markets quite a bit. And the Dow as well. You'll see it on the Dow. So we'll look at the Dow. We'll look at different markets a little bit later. Maybe we'll bring up the dome for a few different markets and we'll look at that. Okay. Right. The slowest of those will probably be. I mean, the Nasdaq's another one which you can work on as well. So most of the algo trading, the black boxes will be trying to manipulate the more liquid markets, like you'll see it a lot on the Eurobonds, the treasuries, and you'll also see it on the ES. You'll also see it on the Euro stocks. So there is techniques to use this on the ES, which I'll show you. It's a little bit different. That's why it's different for more liquid markets. There's certain strategies you can use on liquid markets, but you know, it is purely scalping. I mean, I'll show you what you can do on the ES. Sometimes things will stand out on the ES that you just can't ignore, and other markets that are just as liquid. Right. Okay. So you can see here. I mean, we're already sort of 20 ticks higher off that. Okay. So it's even better if you get a key level and we're looking at our charts and we see something like that. So that's just one setup. I don't really want to go into setups yet. We're sort of getting way ahead of ourselves. I haven't actually got there yet. I just wanted to show you the dome, but funnily enough, something set up at that time. But this is basically the information you see here. So, you know, the last trade that's actually taking place, you see 111, okay, here, but this is the accumulation added price here, just outside of the brackets, okay? So you can see the last trade is only either at the bid or the offer, okay? So the initiated trade that's taking place, okay, is shown in the last trade column, and the resting bids and offers that are actually being worked are shown on the bid quantity side here, okay, and the ask quantity side here, okay? You can see it's pretty even right now. I mean, there's not a hell of a lot to actually cut this off towards the up move here. So watch this. You can see the offer starting to come in now. Look at that 14 level. Just watch that 14 level. You can see there's bids, offers just piling up below that 14 level. So see if it hits that 14 level. See, it just hit the 14s, and it moved to 13s and pushed down about 3 ticks straight away. Okay. So as soon as you see it, you put it in an offer at 13s. Okay. And see now, I mean, this is already in your favor. You try your stop down if you like, maybe to your entry, and then just hold it, or just take 3 or 4 ticks because it's just scalping. Just take 4 ticks. I mean, if you're in that with 10 contracts, from the 13s there, you're sort of 3 or 4 ticks already in your favor. 3 ticks. You can take that right now. Okay, 10 contracts, you're up $300. You might not get filled that on crude, but just give you an idea. Okay, it might even break. Okay, but this is the kind of thing, and you can see now it actually got cut off quite quickly at the 09s. But when you're scalping off the dome alone, you want to be in and out quite quickly. You want to go with the momentum. As soon as the momentum stops, you get out, basically. So sometimes you have to get in and get out as soon as you get in. So you have to be very quick. But you can see this just from the 14s. It's already at the 07s. You guys see this? You guys just see this? Easy, right? And I'm not even looking at a chart. Okay, so let's keep moving. You don't have to have that last column, actually, Jim. You can upgrade. You can ask your broker for the latest version, Jim, for the Infinity AT platform. As I said, this is a pre-release version. It's not been released yet. So you can ask your broker for that. I'm not actually allowed to send out the links, unfortunately, because if you have any problems with it, because it's beta testing mode. I think they were supposed to release it this Monday, but I didn't actually hear anything. I don't know if you guys have heard anything from your brokers. Right. Yep. I mean, we're already 20 ticks off. Sorry, 10 ticks off. We're already at 06, 05. Yeah, lovely 10 ticks. That's what I said. I mean, if you look at that, you can get 10 ticks all the time. I mean, you can do that. 5 ticks on crude oil, $250 for every 5 ticks you get, $500 for every 10 ticks you get. Do that a couple of times a day, you're done. But don't get me wrong. There is going to be times you're going to get it wrong. It's not going to work, and I'll show you later. We'll probably find some trades that don't work. Following that particular strategy. Now, there's a lot of different strategies, but if you use that in line with everything else you've got now, okay. I mean, they're still trying to push this down at the moment. Okay, I know we're going sort of getting ahead of ourselves here, but we actually see some decent activity. You can still see the offers keep coming in. Okay, now we're at the 05s. Okay. Because you can see see these offers, 128, 150. They're trying to push us down. This is what I call an ask push down. See, there's 110 sitting here at 81s. They're probably going to look to try and get to that level. Okay, more than likely. Okay, see that 110. Okay, this is obviously the benefit of having a 10 wide depth. You can actually see that far. So I might not get there, but we can actually see they're still been trying to push us down. Okay, so it's good to stay with it. This is what we call it squeezing it down. Okay, this is squeezing it down. Okay, so. There's a few more bids here, but you definitely take something off, stop a break even here, and now see if this try to get to the 81s, because they'll probably try and test that. Okay, the 81, and that might pull, and then it will just break straight through it. And I'm not even looking at a chart. I have no idea of where we are in terms of structure or anything else. I'm purely just reading resting bids and offers. Yeah, Jim, mine is a little bit delayed. It's moving very quickly because I'm actually sharing this through GoToWebinar. So, you'll actually find that, it'll be actually sort of shifting real quick. But, I mean, I've got my live platform open on the other platform, on the other PC, and that's exactly the same prices, exactly the same bids and offers. So it should be exactly the same. Yeah, but it just might be a little bit of delay on your side there, Jim. That's all. Because remember, this is it's not going to be relaying in exact real time. The crude oil moves real quick. I mean, these bids and offers are real quick, even on my side here. I mean, within milliseconds, these orders are changing, right? So they might be slightly different on your end there. Right? Okay, guys. So let's keep going. As I said, the market will always be working either the bid or the ask. It won't be working both. Okay. Sometimes you'll get the bid-ask spread widen a little bit. Okay, and they will actually see you'll actually see trades hitting in the inside bid and ask. Sorry, within the bid and ask. and the market does do that. The market works arresting orders depending on where the market orders wish to trade. So if the sellers are hitting the bids with more volume, we'll generally go bid. Okay, so the market likes to generally go where the order flow is. If the buyers lift the offer with more volume, we generally go offer. So the market its job is to facilitate trade. So where most of the orders are coming in, that's where it would like to work. So if we keep hitting the bids, the market will keep working the bid. And if we fail to work the bids, okay, then the market will start working the offers. Now the market will only work those offers and bids based upon the order flow that's coming in. Okay, so it's working out where the volume is, where the order flow is. Okay, who's willing to buy, who's willing to sell, and generally it'll be working the bids and offers based upon where the market feels this market is trying to go. Okay, the job of the market is obviously to facilitate trade. So it basically goes where the order flow is. Simple, right? So it will only be working the bid and the ask. Okay, bid or the ask, not both at the same time. So just bear in mind that. That's why I often say, you know, if the market can't go bid on a high, we know it's just offered at the highs, okay, and the buyers were not able to buy all of those offers. So that's often why I say when it's topping out, I'll say, okay, the market was only able to go offer at the high, that might be topping out. So often you hear me in the trade room say the market only went bid at the lows, it might be bottoming out. Okay, so often you find on the market order footprints, we'll see a 0 on the offer on the bids, okay, because the market doesn't offer the lows. Okay, and you'll often see a 0 on the bid on the highs because the market doesn't go bid on the highs. Does everybody understand that, right? So always understand that. That's why you see that on the footprints. Now, let's keep going. Right, understand. Real key important information here, guys. Reading order flow is not an exact science. It is important to just get a guesstimate of each column overall. Okay? So it's not a science. We always talk about trading not being science, and more, you know, order flow when you're trading the dome, more importantly than anything else, is not a science, guys. It is an art form, okay, and it is going to take some practice and experience to get used to this. One of the best ways to learn how to trade the dome and pick out some of the things I did there, okay, is to actually trade it, okay, with a simulator. Just bring it up and actually trade it, okay. With a simulator to start off with, and get used to certain things that you keep seeing on the dome for that particular market. Okay, just keep watching it. And just keep looking for clues, certain things you will see all the time. Now, look, guys, look at this trade, what we just picked up from the 80-14s. Look where it's come from, okay, all the way up here. We're down 40 ticks, okay, just based upon that. Those offers that were down there. You guys see this? As I said, quite often it works out like that, okay? On crude oil it does anyway. But I mean, I have no idea what, I have not even got my charts open, guys. I have no idea what's happening. I just looked at that purely based upon what we saw on the dome. I'm not making this up. Try it out for yourself. Now, reading order flow is not an exact science. Remember that, guys. All you got to ask yourself, and this is all I do myself, okay, is keep asking which is heavier, which is lighter, okay? You just have to get a guesstimate of the bids and offers, okay? Just a guesstimate, just sort of eyeballing this and saying, okay, which one's heavier? Are the bids heavier? Are the offers heavier? Okay, are the bids heavier? The offers heavier? Now, if you cannot quickly say to yourself within a second or so which one's heavier, it's probably even. Okay, so that's what you say. If you can't say whether the bids, all of this column here, you're getting a guesstimate of all of this column here on all of the bids and all the offers. And if all of the bids are heavier, you can see they're actually getting a little bit heavier right now. Okay, a little bit heavier. Okay, so this market might start to get support. Okay, just a little bit heavier than the offers. Okay, but generally I like to see those 100, 200 lots coming in on crude oil. Okay, but you can see the market already, just based upon those bids getting a little bit heavier, it's just testing that 66 and it can't break it. You see that 100, 200 lot just came in at 65s? Okay. Now, but the offers are there. Okay, they're taking the other side. Look at that offer there, 252. Look at that offer. This is where it didn't hold, and the offers actually. This is a spoof trade that I'm going to talk about. This market will continue to push down. See what happened is there. That's actually a flip. Okay, they put the bids in. okay, and then put the offers in here, okay, and they're pushing it down. So that's when you actually go on the other side. If you did get long there, quickly just click reverse, you're pretty much going to make that back straight away, okay, the couple of ticks you might have just lost. So straight away you're getting the offers. Look at this, the asks keep coming in, the offers keep coming in, they're pushing this down, they're pushing this down. This is an ask push down, this is what we call the squeeze. Look at those offers keep coming in, okay. It looked like the bids are piling up a little bit there, but as soon as that 100, 200 lot, whatever it was, that pushed this up a few ticks, they took the other side straight away. So that more than likely was someone trying to spoof the market, okay, trying to push the market up so they can get slightly higher price to sell at. So they've done their job, they put the bids in, they push the market up a few ticks, and then they put their offers in and push the market back down again. You see it then continues, right? So these are kind of things you want to be looking for. I didn't plan to go straight into this straight away, but it's all happening right now. I mean, I think I might just want to minimize this so I don't keep going on to it for now. But hopefully you guys are seeing what I'm seeing there. Right, so you just got to keep taking a guesstimate of the resting bids and offers, okay? Which is lighter and which one's heavier, okay? And also off by a lot or a little, okay? Now, if it's quite even, you're probably better off staying out the market. Now, if you see a spoof, okay, then you'll generally try to use that for your advantage rather than you see what happened is a dome, the depth of market. A lot of traders got out of trading the dome, the depth of market, because they got screwed by the spoofing. They didn't quite know what to do with it. But what I did, I mean, this is quite unique. I don't see a lot of people sort of doing this on crude oil. It's something that I figured out purely from watching the dome without any charts on crude oil. Okay, so and then I sort of saw a similar sort of thing happening on other markets. So as I often say, there's one of the best books you're going to read on trading order flow is going to be your charts. Okay, or in this case, the order book. So the order book is probably the best book you'll read on trading the dome. Okay, the order book is another name for the price adder, the depth of market. Now, and reading that book is the best book. Okay, that's for me. That's the only place I've been able to learn this. You'll never find anything else on this. So I'm just sharing this with you guys. I mean, you can see this market just pushed up again. Obviously, we saw those resting bids. It pushed down, but there's 120 lot just hit the bids. Okay, I don't know if you guys watch that, but you'll see this keep showing up, and this market's now pushed up about another 20 ticks just based upon that alone. So you can see why I like crude oil for this. Yeah, absolutely, Mark. Much more obvious than EuroFX. Yeah, I mean, the EuroFX can be obvious as well. You'll usually see 300, 400, 500. Sometimes you see thousands coming on the EuroFX. This sort of spoof. And the spoof is usually what scares the market into particular directions. So it doesn't happen as often, though, but on crude oil, I see it all the time. Right? So, remember, trading is an art form. It's not rocket science. There is no science to it. It's about reading competition through volume. That's all it's about. Okay, so you know the guys that are going to move this market are generally going to be playing these games on the dome. Okay, I always say to you guys, your direct competition is generally going to be the scalpers, the guys that are generally just trading off the dome. They're probably not even looking at charts. Okay, I mean, I'll tell you what, guys, the time that I spent in the city trading at a prop firm, okay. The time that I spent there, most of these guys and the guys that are making consistent money, I'd say if any of these guys are using charts, they're probably just using it for levels. What most of these guys are looking at, the big traders, okay, that are looking to get in and out, they're only looking for a few ticks at a time. There's a massive misconception that the big traders are these guys, the commercials only, that are looking to trade for big moves. They're not. Most of the guys that are actually going to be working against you, okay, and that's why you'll often find when you actually pull the trigger on most trades and most technical setups that you'll often go offside. So how many times you guys just try to trade off like maybe a higher closing candle or a lower closing candle just to find that market sort of go straight away. As soon as you pull the trigger, it's going against you. Okay, because these guys know you're waiting to get in. Okay, as soon as you get in, they're going to take your trade, okay, and make it go against you, take your stops out as well. So that's what guys are looking for. We're looking for that kind of stuff, okay, on the dome. We're looking for that kind of stuff on the footprints. We're looking for amateurs to get in at particular levels and novice traders to get in at particular levels so we can take advantage of them. Okay, somebody's got to pay us, right, as traders, and unfortunately it's the guys that don't know what they're doing. So, we've got to take the money from somewhere. And that's the business that we're in. So we have to figure out where people are getting wrong and understand the competition very well and take the opposite side of them. So that's why we often don't play the breakout and go counter to the breakout and fade the breakout. Okay, in most cases, but we also know when the breakout is more likely to work after a certain number of tests. Okay, but the other thing is we can also see with the order flow information that we look at, the market order footprints, the time sales, the dome, we can actually see when it's likely to break out and also or hold a level. Okay, the breakouts are actually better indicated by the dome, okay, rather than the initiated trade. Okay, the reason I say that is for example, if we're coming into support and the offers are coming in rather than resting bids, you know that markets are getting ready to break that support. Watch this, guys. See it for yourself. Okay, watch a key support or resistance level. If your market's balanced and bracketing, okay, watch as it's testing the resistance. Okay, are the offers coming to knock that market back down? Okay, or are the bids coming in to actually hold that market up and actually get through that resistance? You'll see it all the time. I see it all the time. That's how I can actually get a feel. I don't actually go with the breakouts, okay, but if I ever was to, okay, at this current moment in time, it's not my plan to do that. But if I was to, I could do it. Okay, but that's only because I'm looking at the right information. I'm not just looking at the chart. Everybody understand that? Do I think the Mark Sanchez got a question here? Do I think the it will last on the CL or get crashed by the algo soon? The thing is, we're reading it, so we can see what's happening anyway. The thing is, it's probably the algos that are actually putting those trades in anyway. That's what we're using. The algos are everywhere, Mark. They're already involved in most markets, but I said they're more involved in the more liquid markets. But again, we can read this information. We know what they're trying to do. So I know what the algorithmic systems are likely to try and do. There's only a certain amount of things they're going to try and do. Okay, and most of them, they're either going to be spoofing. And if they're spoofing, we can see they're spoofing. So we use it. We don't have to, you know, even if certain things stop working, you'll know when they stop working, and then you adapt, right? That's why we call it the art of adaptive trading with the old Westy methodology. We adapt. We don't just keep doing what's not working. So, you know, there might be a case where some certain things that we're doing, we might need to change, okay? But at this current moment in time, you know, I don't see any reason to change it right now. But, you know, that's why you have to stay adaptive. Certain things can only work for a certain amount of time in particular markets. And you know, and if it ever stops working so consistently, you then work out another way to work this market. Start looking for other clues and things that work more consistently. You just got to keep adaptive. You got to keep adapting. You know, you just got to keep up with competition in this marketplace. If you don't, you know, you'll get wiped out. So, you know, that's why we continue to grow. We don't just there's a lot of other things, guys, that I can show you as well. And I actually show you some. I'll give you a sneak peek into the depth analysis stuff that I'm looking at as well, and give you a sneak peek into that. I wasn't planning on doing that, but I've mentioned it now, so I'll have to do it. So there's a lot of other stuff as well that you can use. So you know, I'm not too worried about that because I've actually got tools already in place to deal with that. Okay, which I'm actually reading the spoofing with my depth analysis tools. So I've actually got indicators already set up to actually bring me in the direction against the spoof. Where the spoofing actually works in my favor rather than against me. Right, okay, let's keep going, guys. So, just to recap, trading is an art form. It's not a rocket science. There's no exact sort of rule-based setups, I should say. I mean, I've got some rules that you can sort of follow just to keep yourself on the right track with what I'm going to show you in a little while. But there's, you know, it is an art form. You're going to have to understand that a lot of this has got to do with intuition, which I'm going to be talking about in a few minutes as well. So, watch your trades as they take place. Read the price action. And most importantly, anticipate the next move without confirmation through intuition. Now, we're going to talk a little bit about intuition, guys, but let's have a quick 5-minute break. So you guys can have a little toilet break or whatever you need to do. Let's have a quick 5-minute break, and then we'll get going again. We'll talk a little bit about intuition, and then we talk a little bit about spoofing and the setups, and then we'll spend some more time on the actual dome itself. Okay, so let's talk a little bit about intuition. I'm always talking about tapping into the power of the subconscious mind, and especially when you're trading order flow, when you need to think very quickly, you're better off not thinking. Trading order flow, I think, is more about getting in touch with, some will say, the right hemisphere of the brain, or what I like to think of more as the unconscious mind, or some say subconscious, but I say unconscious. The unconscious mind, for me, the tapping into that power is essential for trading. That's why we often do these techniques and things, and I talk about the alpha level, theta levels, and I often talk about meditation and NLP. For you guys that are not aware, I do quite a lot of work with traders in terms of psychology, and being a certified NLP practitioner, I've studied a lot of different modalities, but NLP being one of the main ones. But I've studied many different modalities, and a lot of them related to tapping more into the subconscious mind and learning to not just think too rigidly and rely more on trusting the subconscious, the unconscious mind, for trading as well. And it's I think one of the best tools you'll probably get. And a lot of traders often feel they have negative thoughts about their own abilities to trade as well. You know, they often say things like, you know, I even hear it in our room, you know, that's so fast, and how that's too quick. How can you possibly trade that? Well, somebody's trading it. I mean, for example, crude oil is a fast market, right? I mean, it's pretty wild, but people are trading it. So it's definitely possible. I mean, I trade it, and many of the other room members trade it. So it's definitely possible, and there's a lot of opportunity there. So, you know, if you can trust your unconscious mind to help you do it, okay, and put your negative thoughts aside for a minute, you'll be able to do it. And it's about just really sort of trusting yourself and your ability to be able to do it. And it's the same with, you know, if you're going to be looking at order flow, a lot of it's, you know, things have to come together very quickly. You know, hundreds of different things might need to come together in 1 millisecond, and there's no way you can possibly do that consciously and think through everything consciously. So, you know, I often talk about trading being like, you know, learning, you know, when you're learning how to drive a car, you know, first of all, you have to really think about every little step you take, and every little next step you're gonna, every little next step you need to make, whether it's clutch work, changing the gears, changing the indicator, moving the steering wheel, etc. But over time, with practice and experience, it becomes pretty much unconscious. You know, you get in the car, you just know where you want to go, and before you know it, you're there. Okay, most of the time you don't even remember the journey, and that's really what trading becomes like. You know, you know what you want to achieve. For example, you have your daily goal. You've set that goal, you've set that vision, and you're really just you're trading in that moment between where you are right now and where you want to be. So I always say, stay in the present moment. Don't focus on the past and what's already happened. You know, if you take a little bit of a hit and you take a losing trade, just move on. Stay in the present moment. Have a new vision. Have a vision of what your goal is. What is your next trade? What are you looking to achieve? Okay, where are you looking for this market to go from and to? And trade within that moment from now, okay, up until where you want to be. Trade within that moment, that gap between the present moment and where you want to be. Don't focus on the past. As I say, the past is a place for reference, not for residency. Okay, so don't stay there. Move into the present moment every time you find yourself going back into the past. Okay, and also don't focus too much on the future. Just have a vision, but keep that vision from the present moment. Have a vision from the present moment. Stay centered, stay balanced. Everybody understand what I mean, guys? Right? So have a vision. So whenever you're trading something, you know what you're looking for. Trust your subconscious mind to know what you're looking for. When I talk about intuition, it's something that is developed over time. Okay, you will need practice and experience to build this. It's not something. Intuition is not something that can be taught. But to give you an idea of my thoughts on intuition, I'll just put a couple of notes here. Okay, so and I think it's absolutely something that you would need to define and pick up yourself. Because even myself, if I'm trying to trade the dome myself and I'm not in that zone where my intuitive mind is in control, I'll often be too slow to be able to even take advantage of trading off the book. Okay, so scalping involves real quick non-thinking, should I say. You need to be very quick, and you need to know what you're looking for and see it and react without hesitancy. You know, if you hesitate on some of the kind of markets, the markets that we're trading, even on the slow markets, when they're getting ready to move, you know, they can really move, even like the markets like the ES. Now, you need to be very, very quick. A lot of information needs to come together in one split second. It all needs to come together. I mean, for example, I take in information from market profile, my price charts, my market data footprints, my time and sales. When I'm actually about to pull the trigger, believe it or not, I'm actually watching my footprint, my time and sales, and my zone all at the same time, and they're all on different screens. And the only way you can do that is through peripheral vision. With practice and experience, it becomes pretty easy to do. But it's almost like a quick snapshot. You just know what needs to happen. You know what you need to see. Now, I always talk about the 4 stages of learning that traders go through, which is unconscious incompetence, when you basically don't know that you don't know. And then you become consciously incompetent. So you know that you don't know, and this is where you start maybe looking to get educated. For example, if you don't know how to trade the dome, and you know your timing is poor on your trade setups, you know, reading the dome and learning how to do it, and it might necessarily mean having to sort of just step on the dome alone without any. Now you might not do very well to trade in the dome alone. I mean, I've shown you some good examples there, but as I said, it doesn't always work that well. You know, it does often work, but you know, you've gotta be able to you gotta work your risk to reward very well. Get out of the trade very quickly as soon as you see you're wrong. You don't really want to take more than sort of a 2 or 3 tick hit when you get them kind of trades go wrong. But you know, on a market like crude oil, you can easily see those through for about 10, 20 ticks on a scalp. Sometimes even bigger. We saw a 40 tick one there, so sometimes you can stay with them longer. Yeah, absolutely. So you don't have to practice it from sim, definitely. And I often say to anybody practicing any of our methods, to practice on sim for at least 2 or 3 months and record your results. Don't just sort of gamble with your results. Just record your results. Keep a record of them. Because it's very easy when you're using a simulator to make some mistakes and just close down the simulator and then reopen it, and then you start from scratch again. But in a live account, you just can't do that. So what you want to be careful of when you're trading with a simulator is that you don't enforce bad habits. So don't just start gambling away on a simulator and make some decent money because using techniques which you probably never would use in a real environment. A lot of traders, for example, will start trading 100 lots and 200 lots on a simulator when they will never actually ever trade that in reality. And the thing is, on a simulator, I mean, the fills are never going to be exactly right. You'll find out when you trade a simulator. The Infinity simulator is actually pretty good. Even X-Trader simulator is pretty good. But you do find that some simulators, the fills are very optimistic. You're not likely to get those kind of fills and those kind of trades in a real environment. But those are just things to be aware of. So, real fills in a real trading environment can be different. Trying to put a 10 lot on crude oil is not that easy. Trying to work in 2 or 3 lots is okay on crude. But if you're trying to work more than a 5 lot on crude, you're probably going to have some trouble getting filled in at times as well. So you are gonna experience these issues with bigger size on certain markets as well. But just be aware that when you're trading with a simulator, make sure you keep it real. Only do things that you are likely to do. I mean, actually, if you make mistakes and you start doing things that you shouldn't be doing, I would actually put that in the journal as well. Okay, so don't just pretend it didn't happen. If you make mistakes, and simulator needs to be treated like a real account. Okay, let's put it that way. Okay, so there's a few things just to be aware of, but it's a great tool for developing intuition and developing. Actually, it's a great tool for tapping into the power of the subconscious mind, the unconscious mind, learning how to develop intuition and learning how to develop this confidence that you also need as well. You need to be confident in your ability to trade with the methodology you're going to trade. So for me, simulators are great tools for building confidence and also for developing intuition and great unconscious habits. But you've got to be careful that the unconscious habits don't become negative habits. So that's why, with simulators, always make sure you're doing what you would do with a real account. Okay, some of you guys probably know what I mean. Some of you guys understand what I mean. You guys have probably all been there. I know I have. I've been there with a simulator to do things that I would never do on a live account. Okay, but you end up making money, and you think, okay, that's good. Okay, and now you go to a live account, and you feel that you've been making money with your methodology. So you then start moving to the live account, but what you've failed to realize is that you've actually been trading everything but your methodology with the simulator. You've just been gambling, but been making money. And when you start to do that with a live account, it doesn't work. Okay, so all of us have been there. Most of us have. If you haven't, actually try it out, but not for too long before you build unconscious habits. Because the thing is, repetition of certain things that you do, okay, what you do actually becomes a habit. Okay, so certain things that you keep doing in the market, you know, losing is actually a habit. Okay, believe it or not. Okay, it's an unconscious habit. You know, if that's why a lot of traders find it difficult to get out of a losing streak, because it becomes an unconscious habit. The unconscious mind thinks it's normal, and that's what they should be getting, losing trades. So that it makes it effortless. Okay, but what you need to do is make winning trades effortless, not losing trades. Okay, and make winning trades that are actually winning trades from following your plan. One of the worst things you can do is actually make money not following your plan, because it's probably worse than actually taking a trade and losing money whilst you're following your plan, because you'll probably lose money in the more money in the long term, taking trades that you shouldn't be taking and making money, rather than actually taking trades that you should be taking and then losing money, because those poor habits will actually work against you in the long term. So, you know, if it's something that will continues to work and you keep doing it, okay, on a simulator, and it works, you know, build a strategy upon that. Put it in your plan. Okay, don't keep it out your plan. You know, if it's something that keeps working, put it in your plan. That way, at least you'll know if you're following it. Okay, and you're actually being disciplined. Right, good. So, intuition. Intuition is achieved when you are in tune with your unconscious mind and you surrender to its power. Okay, I often talk about your unconscious mind being a hell of a lot more powerful than your conscious mind, right? It's a hell of a lot more powerful than your conscious mind. We often talk about, you know, the subconscious mind being able to process, your unconscious mind being able to process a hell of a lot more information than your conscious mind. Okay, there is actually some numbers that are actually being released to say how much information your unconscious mind is able to actually process, and your conscious mind. Well, your unconscious mind. Let's put it this way. Mihai Csikszentmihalyi, in his book Flow, and the work that he did, worked this out to be that your subconscious mind, unconscious mind, can actually process around between 2.3 million bits to 4 million bits per second. Okay, so it's a hell of a lot. Okay, compared to your conscious mind, which only processes around 132 bits. So it's a hell of a lot of difference. Your conscious mind, consciously, you only are able to actually process about 132 bits per second. Unconsciously, you're able to process between 2.3 billions to 4 million bits per second. So now, if your conscious mind was a computer, okay, it would be a really shit one. Let's put it that way. Now, if your subconscious mind would be was a computer, it would be a really, really top of the range, high tech. I mean, there's no computer actually in this world that would be as powerful as your unconscious mind right now. Okay, and there probably never will be. Okay, so I mean, if you was to look at it as a metaphor, maybe your conscious mind is a Spectrum 1 to 8K, if you guys remember that, or Commodore 64, and your subconscious mind is a super duper powerhouse, maybe a full hosting center full of servers. Yeah, Acorn Electron. That's even, it's going back even further, Mandy. Right. So, you know, your conscious mind, consciously, that's why a lot of guys really struggle, traders generally struggle, because they try to make changes consciously. That's why we talk a lot about making changes on the unconscious level, because that's really who's in control, your subconscious mind. Habitually, all the behaviors that you have, the actions that you take, because we all know that who we are, our beliefs, our values, and who we are at the core of our being on a subconscious level is what determines our behaviors and therefore our actions, right? And therefore our results. So the results we actually get actually come from the actions we take, and the actions that we take actually come from the unconscious behaviors that we have, okay? And those behaviors are determined by our state, and our state is determined by our filters, okay? Our filters are our beliefs, our values, and who we are, right? And our state also controls our emotions as well. So negative emotions and positive emotions actually come from our state of being. So those emotions are actually controlled by, your beliefs and values, and obviously some memories from the past as well. That's why we talk about this in the NLP for Traders event. So you guys that want to sort of review that might be a good time to do it right now. So I learn a bit more about the unconscious mind. Right, okay, so we're about 3 o'clock right now, so it's not too bad. We're doing okay, about an hour and a half into the journey. So let's keep going. So let's put it this way: your subconscious mind is much more powerful. Now you need to understand that to get in tune with your unconscious mind, you need to firstly learn to let go, okay, and you need to surrender to its power. Now let's get back. Okay, you are in tuition by that power. I don't know if you guys have noticed this before, but intuition, okay, intuition. When you have intuition, you are actually in tuition. You are actually being tutored by that power of the unconscious mind. If you look at the word itself and split it up, intuition. Intuition is all about feeling a trade rather than seeing it. Okay, it's about feeling. So it's not about actually seeing things. It's more about feeling. You'll actually feel. You'll often hear, good traders talking about, I had a feeling that trade was going to go. I had a feeling this was going to happen, and it does. I didn't quite know why, but I just had a sense that this was setting up. And sometimes, the reason why you say that is because consciously we're not being able to process everything that we've actually seen. Okay, maybe on screens. So what happens is we actually get a feeling from it. So consciously, we generally like to say, oh, we've seen this, and we like to think logically. Okay, the logical side of the mind, this is sort of left brain thinking. Okay, the left side of the brain is a lot more. How do we say it? It's a lot more sort of raw based. It's a lot more scientific. I've actually got something here from the intuitive trader I've talked about before. If I can get that. Just give me a sec, guys. So these are the characteristics of your right and left hemisphere of the brain. If you think of a left hemisphere, this is basically what is generally in control through conscious effort alone. Left hemisphere is analytical, it's objective, it's deductive, it's time-bound, scientific, it's conscious, it's logical, okay, it's rational, and it's too intellectual, okay? It's verbal and realistic. Whereas your unconscious mind, and this is where intuition resides, is imaginative, subjective, inductive, timeless, artistic, unconscious, intuitive. Okay, it's feeling based, it's metaphorical, it's internal. Now, what you realize is what we're talking about here, the right side of the brain, and all of the qualities that we say as traders you need to actually have and achieve, is generally what we find on the right hemisphere of the brain. Okay, on the in more of the unconscious level of the mind. And this is being imaginative, being timeless, artistic. Okay, the artistic creative streak in all of us. Okay, that is generally from the unconscious level, and that's also where intuition as well. Okay, intuition. and feeling as well. So just understand that this is all coming from the unconscious level. And the unconscious mind, one of the most powerful ways to sort of become in tune with it is to sense the feelings within your body, okay? Rather than actually think everything through logically. So actually sense feelings within the body, bodily sensations that actually give you a hint or a clue as in what to actually expect. So remember, intuition is a feeling, okay? It's not something you will get that feeling by looking, okay, by seeing and hearing things, okay? So it's really about auditory senses. You know, your unconscious mind obviously processes information auditory, kinesthetically, and also visually as well. Now, putting all three together is generally what sort of can really trigger off intuition. But when the actual trigger of intuition comes in, it is a feeling, okay? It's not a thought, it's generally a feeling, okay? So remember, intuition, it should not be forced, okay? It should come naturally. So don't try to enforce intuition and create intuition. You cannot do that. It is something that comes naturally from within, okay, through the unconscious mind. But you have to recognize when it's there and when it's not there, okay? So you got to recognize it, okay? Learn to find when you have an intuitive feeling. And anybody actually understand what I'm talking about here? Okay, some of you guys must have at times experienced intuition, and you'll know what I mean. It's not a thought, okay? It's a feeling. Some people say it's a gut feeling, right? Okay, it's a sense of feeling that emits confidence. Okay, so if you're not quite sure what it feels like, intuition is something that you can't quite put your finger on it, but something that you feel within, okay? And it's usually a sense of feeling that emits confidence and a knowingness through trusting the unconscious mind, okay? If you trust the unconscious mind, this intuition is gained. So make sure if you understand what confidence feels like and knowingness feels like, okay, if you're not quite sure, self-inquire, go within, take yourself to moments where you have known something is about to happen, and notice the sensations and feelings that arose, okay? Notice the sensations and feelings that arose when you was actually confident about something happening, and it did happen, okay? That is actually the feeling behind intuition, and that is what you want to look for. Now, for each and every single one of us, okay, we need to find that sense, okay, of intuition. Now, not all of us are going to be able to find it so quickly. Some of us have already been in touch with it many times, so you know when it's there. But if you look for it and you actually observe it when it is present, you'll know what to look for when it occurs in the future. So you'll know when you have that sense of intuition, that feeling. And I'll tell you what, intuition, when you have it and you get in tune with it well enough and you're really in that zone, you know, it's the best methodology in the world. You don't really need anything else. Okay, I mean, if you can trade the dome, okay, with intuition alone, no charts at all. If you get really good at it, okay, just get power, tap into the power of the subconscious mind, okay, and you can do it, okay, you can do it, and it's probably what you're gonna have to do in order to really sort of master trading with the dome initially. Now, it takes time and practice to move into the flow of intuition. But when you have touched it and felt its presence, you will undoubtedly know when it is present. You will know, okay, trust me. And if you don't feel it, as I said, don't force it upon yourself and say, oh yes, I have intuition, and just don't, what should I say? Don't dummy intuition in a way. Don't pretend intuition is there, okay, when you know it's not. Okay, more than likely you're going to lose money if you do that. It's there or it's not. Simple as that. You either have it or you don't. Okay? You will feel it. Okay? Most important, you will feel it. Okay? Look for that feeling. Notice whenever you actually, maybe you're trading, learn to become very aware, so using some of the techniques. Maybe use the technique that I showed you earlier, using you know, that 3-2-1 method. Okay? Get into the alpha level. Okay? And then maybe just notice and observe your thoughts, your feelings. Okay, go within, notice any feelings that you have, any negative thoughts, any negative emotions that you have. Notice any sensations that you may feel related to those emotions. Listen out for sounds. Listen to the sounds within the room, outside of the room. This raises your awareness levels. By raising your awareness levels, you become more conscious of the unconscious mind. When you become more conscious of the unconscious mind, you become more in tune with it. Does that make sense, guys? So that's basically the technique that I use. I often say to myself, become conscious of the unconscious. When I become conscious of the unconscious, then I become more in tune with it. And that's when you can actually become more in tune with intuition, as well as a lot of other things. And you also, when you become conscious of the unconscious, you learn to let go of a lot of negative emotions, negative thoughts, and negative feelings that generally arise and actually cause you to lose money in this business anyway. So you don't want those anyway. So it definitely does work, and it's something that you want to work on as traders. Definitely work to become more in tune with self, and become more conscious of the subconscious mind, because it is in control. So get to know it very well, and it will work with you rather than against you. So remember to look for feelings. Okay, that's generally the truest emotions that we have. Okay, the truest emotions that we have will actually come through feeling. Okay, not through thoughts. Okay, thoughts are very weak compared to feelings alone. Okay, feelings are it's a very powerful force. Okay, if you can get in sense of your feelings. So become in touch with the intuition that you have. Okay, quite naturally. As most people say, you generally will feel intuition in the gut, or sometimes what I have actually found is actually I feel it within the heart. So my heart tells me what to do. Okay, so I usually go with my heart. You'll often hear people say, go with your gut or go with your heart, right? How many of you guys have heard that, right? You'll often probably even say it yourself. So it's actually in our language already without even knowing it. Okay, it's already in our language. Okay, people that even don't understand how intuition comes about, okay, or what it is, and don't actually understand the mind, subconscious mind, and how it works. They still already know. Through the language that we use, we already express it. Okay, we already say, oh, I had a gut feeling, I had a sense. Okay, I had a feeling that was going to happen. Okay, I knew that was going to happen. Okay, or I just knew that was going to happen. How many of you guys used language before? Right? And what you've got to do is just take yourself to that moment when maybe you've used that before, okay, in the past, or maybe catch yourself next time when you actually say it and say, I knew that was going to happen, and just quickly, just be aware of it and go within. Okay, I had a vision, absolutely. I went with my heart. My heart said to go with this. Okay, my heart said not to go with it. So sometimes you'll actually find that within trades as well. Yeah, it's actually your feelings are probably some of the best indicators you'll actually find in this business. Okay, better than any stochastics or MACD. Okay, but you have to learn how to use it for you rather than against you, because you got to face it. You're going to have feelings. You're going to have emotions. You either let them work against you, you can't block them out, or you have them work for you. So you've got to make a choice right now. Right, guys, let's keep moving on. You guys like this presentation? It's pretty cool, right? I don't know if you guys are you guys probably can't see the actual smoothness of the actual animation, but I think you guys can probably see it a little bit. But it actually flows quite nicely. Spoofing. Let's have a look at spoofing. So this is me being in touch with the subconscious mind. I told you I'm pretty creative anyway. That's probably why some people call me the chart artist. That's why I have pretty charts. Right, okay, spoofing occurs in many ways in the dome, but most commonly it is when traders are usually posting much higher quantity than they're actually willing to buy or sell. This quantity is usually so high that it stands out on the ladder. It's usually easy to see as it does not fit in with the orders that surround it. For example, you might see 3,700 sitting between an order of 800 or 900 on the liquid market, or maybe, for example, on a less liquid market like crude oil, like we've just seen earlier on in the examples that I showed you. You will have to look for maybe sort of 1 to 200 lots sitting in between maybe 20s and 50s. That's quite common. You'll see that on the Dow and the crude oil market. Gold, you do see it, but not so much. Okay, gold actually is one of those markets you're better off going with initiating activity. You do sometimes see resting bids and offers that you can sort of lean on, and you do see spoofing activity that you can actually use. The spoof is generally something that's shown on the book. okay, on the dome, in order to cause create a false impression in other traders' minds as to what the supply and demand is around a certain price level. So generally, like we see, for example, like crude oil right now. Watch this. I mean, I can just see this now. If you watch crude oil, there's like all of these 100 lots here. Okay, so you can actually see if we like put an offer there. Okay, they're either going to pull there, okay, or they're going to hold. So now, if you can see, this is actually sort of struggling to get through those offers right now, and it's trying to push down a little bit. Right? So, something like that you want to see move fairly quickly. You can see they're trying to push it down. And, you just quickly scalp a few ticks out of it. And you just quickly, like, that's a 5 lot. I'll just take 150. You could wait for it to hit the target. But you guys see that? I just saw that on the book. So I just thought I'd use that quickly as an example. But you can see I take $150 quickly on that scalp, just like that. Yeah, very easy when you know how. And I'm just moving to this book every now and again. I'm not even looking for this. I'm not even focusing my full attention on this. I'm just doing this as I'm doing a presentation. I'm seeing the book and I say, okay, there it is. So obviously, I'm not looking at this consciously. I'm not trying to figure this out. I'm just sitting here doing a presentation, okay, and see something from the side of my eye and just take the trade. Now, who's doing that? Who is in control of that? It's not me. Okay, maybe it is. I don't know. Something's doing it, okay, but I believe it's intuition. It's my unconscious mind. I trust its power to do its thing, so I just take a quick little scalp just on something like that, okay. And that's what you do. You just look for these levels, just take a quick little scalp and you're out, okay. You don't have to work it for 10, 20 ticks. Just take 5 ticks out of it. Take 3 ticks if that's all it's going to give you, okay. Take 4 ticks if that's all it's going to give you, okay. But that's what if you're scalping the book alone, you're often only going to get maybe depends on what market you're trading. You're often only going to get 10 ticks or something like that. Maybe, but you might get about 5 ticks real quick. Sometimes you'll actually see the market moves real quickly off it. You can see that was sort of stutter stepping, and it's sort of coming back to test that level. When you see that, you might actually get back in again. Okay, so I mean at the moment it's still testing the same level. It's come back to test it, but actually some of those offers are gone. So I'll be a little bit more wary of it. But actually, I mean, if you have a look at where I got in. Okay, well, right there, I mean, I could still hold it. If you had a look, my last trade was short 81.31s. We're actually at the 27s right now, okay? But you can see it struggling to get through the 26s because some bids keep showing there. So as soon as you see that, that's probably be an exit, okay? But, had those bids not been there and we worked it straight down quickly, what you could do is obviously just put your stop or break even, then hold it if you want to look for more. There's many different ways you can work it, but I'll just give you an idea. Right, okay, so let's continue. Spoofing occurs many ways in the dome. Okay, we've already covered that. Spoof is to create a false impression. Okay. Now, in that case, those offers are all there. But what might happen as the market got there, we might just actually pull them all. We're actually down at 25s now. We already moved 5 ticks off that. Okay. So if you had a 5-tick target off that, you just get filled. Okay. But my job at the moment is just to finish the presentation. We'll move on to that a little bit later. So. Those orders might not actually be real, but what you'll actually find on most markets, they will generally be curious to test those levels. Okay, they spoof, okay, for many different reasons. But let's have a look at some of the reasons that you might find spoofing on the book. Okay, they spoof to scare people away from prices, or sometimes they do the same for opposite reasons. They want to attract the market to their order. So we'll often see that. We saw that earlier on when I showed you guys there was some offers a little bit higher up. I mean, the likelihood of the market coming there to test those high volume offers, okay, was actually quite high. Now it tested it. Not only did it test it, it actually held it. Okay, so one of the things that I like to see happen when we're testing key levels is to get a feel for whether it's actually sticking or whether it's real spoof. Now, sometimes there's many different ways to spoof. Some traders will actually spoof the market to get into a trade, only to get out real quick and get back in again. Okay, on the other side. I'll maybe explain that a little bit more clearly in a while. But one of the things I might do, for example, is like if we're right. I can't annotate that. Let's have a look here. I'll show you in a sec, guys. I'll show you in a sec. Right, let's just keep moving on. Okay, so one of the main reasons we get spoofs, okay, they spoof to scare people away from prices, or sometimes they do so for the opposite reason. They want to actually attract the market to that order. People are curious and they bid the price up or offer it down to the spoof. Okay, I mean, you can actually see our short of the 31s there. You can see we're already at 23s. You guys see this? I mean, I've given you 3 good examples already, actually more than that. Some of you guys have actually been sending me messages saying I've been doing this and I've made $700. Somebody said I made $1,400. Okay, just doing this today, just since I've been talking about it. Yeah, but you can see, I mean, even that works. You see the 135 just waiting here on the bid. So now, is that real? Okay, so that we don't know if that's real until it tests that level. Sometimes what you find is a market will stop just short of the level. It doesn't actually want to go close to it. But you see there's 154 here. Now this is what I call a bracket. Okay, so here there was a bid here. Okay, but there's an offer here at 26s. But that 120 is more than likely going to. I mean, at the moment it looks like the 8120 is holding, so it wants to test this 8126. Okay. So you'll keep an eye on that. But one of the things you want to look at is what's actually piling up on front of that resting bid there. Are those sellers actually hitting that bid? What's the last trade there? Okay, are we hitting into those bids at the 21s? If we're hitting into those bids, we might even get through that 20 level. Okay, because there's all these offers here still. But you know, we can see the 20 at the moment is currently holding. There we are. That was a pull. You see that? That was a pull. You see that pull real quick. What happens is the market actually pulls that order. Sometimes what you find is they'll pull that order, okay, it goes through it and then still holds. And that is actually one trade you can actually still get into. Because what happens is sometimes these orders actually get pulled, it breaks slightly through it. So I'll usually wait till it tests. If it looks like it's holding and some bids are piling up just before it, there's like a 3 lot there, it doesn't really matter. But if it pulls and then actually all of a sudden loads of buyers come in just below it and push it back up real quick, you join that momentum. Okay? But then you can also see this these offers here, which are 25s. You'll often see, I mean, if they're trying to, yeah, somebody's just said chasing it down. What they might do is start trying to, if this is at 25s, then they might start offering the 23s. Okay, watch those offers at 25s. Do they start coming lower? Maybe they start offering the 21s, and that's what I call an ask push down. Okay, when you see that, that's what you go with when you see a momentum. When you see momentum, so when the market is trending and you want to get in mid-trend, you want to see these sort of ask push downs. You can see this ask is actually pushing this down now. You see these offers coming in again? You see these offers coming in? Look at these offers. Look at these offers coming in. This is what the ask is trying to push this market down. Can you see that? The offers are a lot heavier. You see they're trying to push this down. That's what we call an ask push down. Okay? So we're not actually watching the sellers hitting the bids. We're actually watching the ask, okay, the offers here. So think of this as, you know, the heavier this is, okay, the harder for the market to move up. Okay, the heavier the bids are, okay, the harder for the market to move down. You see what I mean? Yeah, but look, we're still testing that 20 level, and these offers are trying to squeeze it down to that 20 level, but we still can't break the 20s. Okay, we still can't break the 20s. Now, what might happen is these offers here, okay, might actually decide to pull because they find that they can't get through it. Okay, and if they pull, this market will then go through that 25s and probably get to 22s and probably go to the 30s here. Okay, but that's if they pull. But keep a close eye on them. Okay, so I'll be watching this real close because they keep offering it down, okay, but are not able to get through the 20s. Okay, even though there's not a lot of volume there at the 20s. So I'll keep a close eye on it. But if you're short, you probably want to take something off there. Okay, even with all these offers here, okay, this market is trying to push this down, but the bids at 20 keep holding. So this is when I said if we can't offer the low, I mean at this current moment in time, you'd probably be visualizing something like the market hitting the 20s, the sellers are hitting into the bids there, and actually on the footprint, you'll probably see loads of sellers hitting the bids there, okay, and not able to actually push this market lower. And you might see a little bit of volume hitting into the bids at 19. So that's sort of a minor support, but it would be sort of a profit-taking level, okay? See, the 20s just keep holding, okay, keep coming up the 20s. These, I mean, it would still be good to stay short, but definitely a profit-taking level. Not a place for you to get long, but definitely a profit-taking level. So in this case, you can see these offers here are not necessarily real, okay? They're not even nowhere near the market, but they're doing their job in pushing this lower. Look where I got short. My last trade was at 81.31s, okay? Obviously, I could have stayed with that and looked for more out of this trade, but you can see purely just looking at that, this market is now off and it's coming off even more, right? I know, Jim. It is terrific, right? You won't read about this in any book. I can guarantee you that. This is I can guarantee you no other seminar will ever teach you this either. No other trading room. This is because it's unique to what I do. I don't even know. This is what I've learned purely from watching the book myself. Nobody's taught me this. So it's all about being creative, okay, and learning how to work with that subconscious mind. Right, I had a question here. Confused about the arse pushing down. I thought the market tends to go towards big orders. No, Phil, you've misunderstood, Phil. So they're actually, you see it's leaned on the offers already, and those arse are trying to push it down. Okay, those arse are pushing it down. Okay, it might come back and pull back to those levels and then continue. Okay, but in this case, with this kind of momentum, you already be short. You're not looking at. You can get in, but in this case, I'll show you what you need to look for. You need to look at setup 3 that I'm going to go through in a bit. But we're running out of time, so let's keep going. So you'll find people are curious, okay, and they bid the price up or offer it down to the spoof, so they can see test whether it's the order is genuine or just a spoof and removed immediately. There are a lot of algorithms with black box systems that are programmed to spoof, but sometimes it becomes pretty easy to figure out. I mean, like right there, we could actually we can watch what they're doing. Okay, it's not it's not something that's hidden from us. So guys, for now, don't ask any questions. We'll answer questions towards the end, because you guys will have questions, but we'll have a little bit of a question because I want to get into the market before it slows down. Otherwise, we won't be able to do any live sort of trading. I know I've just taken a couple. Well, I've shown you some there, but I've only taken one, so I wanted to show you some more. So otherwise, we're going to go right into lunch break, which is actually only half an hour, and it's not the best time to do this. So let's keep moving on quickly, because actually we probably will be right into the lunch break when we actually move to the live trading, which wasn't what I wanted to do, but we did start late. We'll see what happens. So there are a lot of algorithm systems, okay, but they are generally sort of focused on the more liquid markets. But you will find spoofing on all markets. But we can read it. The great thing is with all the markets, the tools that we have, the footprints, we have the dome, we have the Thomas House. There's price transparency. We can actually see what's happening where. So if we ever find that a level is a spoof, and we was looking to lean on it. Say for example, there was loads of bids resting at that 20 level. Say for example, we bought that at 20 level. And it didn't hold. Okay, I mean we obviously see the bids that 20 level is holding. Now, say for example we bought that. I mean there's 100 lots coming in now. Okay, at the 20s. So you can see those bids are trying to buy that now. Okay, so I mean it's already starting to push off it, but you could actually buy it. You could actually put in a bid right now. See if you can try and get in ahead of that. I'll be aware of these offers there as well though. But you can see you can try and buy that there. I mean ideally you try and get a little bit closer to that level and see if you can push up. Now, say for example, we only moved up about 3 ticks, and all of a sudden it starts to push back down to 20, and it looks like it's going to actually break. You can actually get out. Okay, so you just take 2 or 3 ticks if you have to. Sometimes you can hold it for more. I mean, there's offers here, 100 offers here. Let's just do this for example. Okay, let's just say I want to get short the 24s, just leaning on that offer there. Okay, if I can get short. Okay, and now for example, if I feel that that's going to actually break, and I've just got short here, and I feel I don't know, that's not the best example here to use. But say for example, I see all these bids coming in here. Okay, I just saw 500 bid at the 20s here, and I want to get out. Okay, quite often you'll often find that you can actually get out at break even. Okay, quite often you find you can get out at break even. I mean, you could hold it and see if you can still come off a little bit and just leave a stop in place. Okay, or you could just leave your target in place like this. I mean, those bids were there. Okay, you can see that 20 level. There's all those resting bids coming. Obviously, we know they're not real, but they're spoofing this market higher. Okay, the spoofing activity is scaring this market higher. Okay, but we've actually got short here. Okay, so what we might do, I'm just doing this for example purposes, guys. I'm not saying that you should do this, but I'm saying here, like, if you feel like you made a mistake, you just quite simply put a order in to get out. Okay, I mean, if you can't get out there, and it's not filling you, and you want to get out, okay, just take a 1 tick loss. It's much better than take a 10 tick loss, right? You're more than likely going to make that back, even if you get about 5 ticks in the next trade. So just quite quickly, all I do is just get out of break even. Okay, you're going to pay commissions, but so what? It's better than taking a losing trade, right? So I'm just trying to show you what you might do if you feel that trade's not coming off. Yeah, I'm not giving you a real example of what I'll be looking for, but let's just say, I just got into the market just off nothing there, but you do get a chance to get out, okay, in most cases around break even, or even for a few ticks profit sometimes, okay, even if that trade fails. So, there is going to be times when the market goes against you and you're going to have to get out and actually take a bit more of a loss than you might like to. But even if I put a 5-tick stop in here, I'm just 6-tick stop, 6-bit profit target. And if I'm 3 ticks against me, I might actually decide to get out there because I see something on the book that's changed that I don't like. I might have just got short and see loads of bids coming in, okay, and I don't like the fact that I've just seen that, okay, because that wasn't there when I got in. So all of a sudden, for example, I sell the offers here. I don't know it's not real, okay. So I lean on those offers, 200. So I lean on those, which a lot of traders will. So the market starts to push down a little bit, but then all of a sudden, oh, well, there's no real follow through. So it comes back to that level again, and I'll go offside. Now, if I just go offside and there's not a hell of a lot of bids pushing this up and the offers are still there, I'd probably hold on to it, right? But if I see something like what I just saw there, where there's 500 came on the bid and actually trying to spoof this market higher, okay, what I will do is probably get out. You guys see what I mean? Does everybody understand what I mean? So this is more for for the trade management side. So you don't just use spoofing activity to get in; you also use it to get out. So sometimes you might get in and say, "Oh, damn, wait a minute," because these orders on the book change real quick. Trust me. I mean, on crude oil, you need to be reading this real quick. And if you ever get any reason to get out, just get out. And you'll often hear good traders saying, "If in doubt, get out," and that's absolutely true with this. Don't wait around and hope and pray that you're going to get it right. If in doubt, just get out. Okay, I mean, to start off with, you can just keep it simple. Just put in like a simple bracket, like a profit target of 6 ticks, stop loss of 6 ticks. Now on the crude oil on 5 contracts, that's $300 risk for $300 profit. And just scalp that off the book. You'll get it pretty often. Okay, you'll actually be very surprised, guys. I mean, I talk about it's really easy to make a few $1,000s a day on crude oil. You'll see why when you just trade this particular method and the setups that I talk about when I'm going to go into now. You do this, right, guys? Do it for 2 or 3 months and tell me how you get on, okay? You'll be surprised at how much money you can make on a daily basis just following this. You'll be really shocked, most of you, okay? You'll understand that you don't need to go even. You can just trade this alone. You don't even, if you wanted to scalp, you don't even have. Most of the time, I'm looking at. This is what I used to do when I used to scalp. Okay, I don't really look at anything else. I just have an idea of key levels that I'm looking at, and I'll look at maybe some price action. But the main thing I focus on is the book. Okay, way before market delta when even started to use footprints. Okay, in the time of sales. Now, obviously, I'm looking for bigger moves. I've found that I like to go for the bigger trades. So what I generally do is I look at more stuff like market profile, auction theory, because I'm looking to find those bigger moves, because I'm trying to find where bigger trades may actually start off. Okay. Whereas when you trade in the book alone, you don't really know where you are in terms of structure, so you don't really know whether a big trade is about to start off or a small trade. But I'll tell you one thing, all trades start off with smaller time frame activity. Okay, all trades will start off with what you see on the book. Okay, whether it's a bigger time frame trade or a smaller time frame trade, whether it's a 10-tick scalp or a 200-tick move. Okay, they will all start with what you see on the book. Okay, I can guarantee you that. Okay, why? Because resting bids and offers cut off every directional move. Doesn't matter whether you're trading market profile for 2 or 3 day trades. It doesn't matter. Okay, it doesn't matter whether you're looking to scalp 3 or 4 ticks. It doesn't matter if you're looking for 30, 40 ticks. Okay, the fact of the matter is, any directional move that you're actually looking to get into, you're probably going to get a much better entry if you use this information. You guys see, I mean, even just using this information for scalping, if you was to use this for taking trades, maybe, for example, you're looking for a 100-tick scalp, how your risk can be very minimal. Okay, your risk can be very small if you're using this to play off at a key level that might give you a potential move that's going to be a real big move. Okay, so that's why I use this particular technique, but with other tools, to get into bigger moves. Okay, but you can also scalp it. Okay, but one of the best ways to get good at trade execution, trade management is actually to scalp. Okay, and then once you're good at scalping, just using maybe a 5-tick profit target, 5-tick stop. Once you get good at that, then move to maybe staying in those trades a little bit longer and scaling out. That's what I did basically. That's exactly the process I used. Okay, I don't even do this anymore, guys. What I'm showing you, but I've done it for so long. I find it quite effortless, just doing. It seems quite natural for me to just get in and out of the market off the order book. I can do it all day long if I like, but I found a way that I like trading which suited me better. which is actually taking less trades and staying in those trades longer. Okay, but that's it's all about personal preference, really. There's nothing wrong with scalping, and some of you guys would actually be suited to that more so than staying with the trades for the bigger ones. Right. Quite simply, what you've got to look at when you're trying to understand spoofing, okay, in genuine orders, what you'll find is genuine orders are usually quite consistent. Okay, and most spoofs are generally not very close to the current bid and ask. The current bid and ask would be this, okay, this inside bid here. Okay, the inside ask, that's what we're currently trading. Okay, you can actually see the inside bid and ask on your actual dome, right? And what you'll find is these tiers above the current ask. Okay, so like you see we're actually at 24s right now, 25, 26, 27. That's generally what you'll find is most of the spoofing will occur at probably 26s and 27. Okay, it generally won't be on the inside bid and ask. Okay, so it's usually 2 or 3 ticks away from the current price. Okay, so understand that. You'll often find it also, I mean, I can see it more so with 10 wide depth. Okay, where you can actually see like 212 sitting up here. You guys see that? So obviously it comes useful because if we only had the 5 wide depth, we wouldn't be able to see this 120 at the 30s, 220 up here. So keep a close eye on that. If this market continues to move higher, we know that there's some resistance at 30s and resistance at 33s. You guys understand what I mean? Right now, so if we might have a 1272, 1618 extension here, okay, or at those levels. So if we start to get there, I mean, you can see some offers coming in at 27s as well there now. Okay, so as soon as we get those offers coming in, again, if that's a key level and it's in line with one of our other setups, we can actually lean on that level. Sometimes we will only get sort of 2 to 3 ticks within that level on the crude oil, and often on the Dow as well. We'll often actually only get sort of 2 to 3 ticks within that sort of level where that volume is. So for example, like we might actually sell 200 at 25s here and still hold the 22s as resistance. So the 25 might, that 25, we might see loads of offers come in at 25s here. There's 101 there right now. Well, we might actually hold the 21s. So what might happen is that the market won't even look to go close to that level. And sometimes you'll find that what will happen is the bids will start piling up. The offers will start piling up just under that offer. So there's 130 on the offer there. So what you'll do is watch the 24s and 23s. How are they being worked? Okay. So those 24s and 23s are probably the trades that are actually going to move this market. That 25 is just somebody probably just showing that there, just purely to they're probably showing, somebody's probably showing 100 lot at the 25s and selling the 23s right now, right? So you could do that yourself, okay? I mean, I could actually put in a 20 lot right here on the offer, and that will show up on the offer, and then I'll get a 1 lot and sell it right here. You guys see what I mean? So I could actually show, like, it depends on the size you want to put in. I mean, I can change my quantity here, okay, of what I want to show. I might want to show, like, obviously you guys have a clip size on your account, so that will be set by your broker. What's the maximum you can actually trade? But if I set my clip size to like 100, okay, so it obviously depends on your account size how much you can actually set that to. So if I put that to 100 now if this was a live platform, I could actually put 100 there and actually sell a 5 lot here. So I could actually spoof myself. I could put in a 100 lot spoof and sell a 5 lot here. You guys understand what I mean? So that's obviously a benefit of having a big size account. You can actually spoof yourself. Obviously, be careful that you don't get filled. Don't put that 100 lot close to the market here. Okay. So you could do that yourself, right? I mean, I joke in the trading room sometimes. All of us should just say, look, okay, we got a resistance level here. Let's all just offer that level and just short maybe a couple of lots just ahead of it. So if all of us, maybe for example, if all of us just maybe sell offer a 10 lot at the same level, and there's there's 100 of us offering a 10 lot at a particular level, we're then showing 1,000 there. Okay, we don't want to get filled. Okay, but there's 10 of us, 100 of us showing the 10 lot. Okay, at the same price. Say, look, let's just offer this, and we'll all sell 5 ticks below it, right? But we're more than likely going to move that market. So whenever you hear this stuff about us guys, retail traders, we can't move the market, it's all bullshit. You can, okay, if you know what you're doing. Okay, you can spoof the market, okay, and spoofing is probably one of the best ways to move the market. You might not be able to move the market by initiating trades, okay, but you can definitely spoof. Right? So generally, just be aware where the spoofing takes place. It's not generally on the inside bid and ask. It's generally just a few ticks away from that. So just be aware of that. Okay, let's keep going, guys. The trick with reading the dome, okay, is to identify quickly with orders that are quickly which orders are sticking or pulling. Then lean on what sticks. Okay, so lean on what sticks. If it's not sticking, say for example you lean on something that looks like it's sticking, okay, meaning that it's staying there. So for example there's offers there and you lean on those offers and it looks like it's sticking and it's holding, then all of a sudden it looks like it's gone and you've actually short just ahead of that and the market starts to edge back towards that level, you might want to get out, okay, because more than likely that offer's gone and the market's going to go through that level. So if the orders pull, okay, you can often get out because we're reading this real quick, okay, you can often get out, okay, just as quickly. So you know, it's not, you know, if you're going to lose, you don't have to lose 10 ticks or something. If you're leaning on an offer and it goes 2 ticks through it, get out for 2 ticks loss. Okay, you might be looking for 5 ticks. Okay, but 2 ticks, hit here and there is very easy to make that. Okay, trust me, when you try this out, okay, you'll be laughing at yourself how easy this is. Okay, you just have to get used to it, but you need to experience it for yourself. Okay. The other option, okay, trade with the momentum, okay, into the pull. So maybe what we do for reversal trades, we usually lean on resting bids and offers of high volume. And if it's not there, we might actually come into a level where there's not actually high volume and we actually see it's a good setup on the charts. And we might actually see loads of, say for example, we come into a range high, okay, so resistance level. We're looking for response to sellers there. But instead of offers, we actually see resting bids. You can be pretty sure that market is getting ready for the breakout. So, I mean, I saved myself a hell of a lot of trades by looking at resting bids and offers. So, I might, for example, see a 1272 extension, and I'm going to short that, and all of a sudden, I see loads of resting bids, okay? I will actually say to myself, oh, there's no way in hell I'm going to short into that, okay? Okay, if they pull, then maybe, yeah. But I'm not going to short into loads of resting bids because straight away I've got competition. So, think of, trade execution in terms of competition. Who is your competition? Okay? Now, if I have competition as a seller, from resting bids, and it's good competition, and there's a lot of competition, it doesn't make sense me selling into it. The likelihood of my trade coming off very quickly, okay, it doesn't make sense. So that's what I save myself a hell of a lot of trade, and you guys will save yourself a lot of hassle and a lot of losing trades by using this as an edge. Okay, you guys understand what I'm talking about? Okay, so just watch it. Just as you're about to pull the trigger, just do a quick guesstimate. Okay, look, I'm getting short. I'm looking for a short. Okay? Is the offers heavier or the bids heavier? Just ask yourself the question. And if the offers are heavier, take the short. No questions asked. If the bids are heavier and you're just seeing a short setup, don't take it. Okay, I don't care what price action you're looking at, what setup that is, how much you've back tested it, and how often you've seen that trade work out. It doesn't matter. Okay, in the present moment, it's all bullshit. Okay, the only thing that really matters is right now. Okay, are these fuckers going to cut your bid off? Okay, or are they gonna cut your cut your trade off or not? Okay, that's all that matters. Okay, and that's all you're interested in. Okay, and if they're sitting there waiting there, okay, with resting bids, okay, yeah, absolutely, that's what it's like, John. They're getting ready to cut your nuts off. Okay, but obviously for you ladies here, you're not too worried about that, but for us gents, it's a big problem. So, keep your nuts, guys. And ladies, keep your heads. Yeah, if they start pulling and the resting bids, then I'll generally look for offers coming in and then I'll get in. But generally that would be with momentum, Mark. So, and that would be the momentum trade, what I'll show you, which I'm actually going to show you some setups. So that will make sense, right? So, look at this. I love this. Okay, look at the DOM. We're going to go into the DOM entry setups now. Depth of market entry setups. Now, there's 3 setups that I want you guys to sort of focus on starting with. But do take your time and spend some time just reading the book as well, and get used to that. And try to trade off the dome, just some of the techniques that I've already just shown you. And now, setup 1. balance area trades. So these are when you find the market is basically bracketing or sideways. So I'll show you what it looks like. You know, pretty much a balanced market or a sideways ranging market. So find that the market is balanced, range bound on a small time frame, because we're looking at this more for scalping. So the webinar I see is for scalping the dome, but you can use these methods for the bigger trades on the bigger time frames. But I think it's probably better to start off with looking at this for scalping, getting in and out more quickly. It will work in your favor, and then you can start transitioning those execution skills more so towards trades, staying in those trades for longer. It's basically the way I worked here. I worked on scalping first, then I started working more on the bigger trades and maximizing profits. So some people will actually say stay away from scalping and focus on big trades. I say actually you're better off going the other way around. Focus on scalping first and then working towards bigger trades, because trade execution, it doesn't matter whether you're a big time frame trader, whether you're looking at a 60-minute chart, 30-minute chart, whether you're looking at your 1,000 chart, it doesn't really matter. Trade timing and trade execution is the most important thing in trading. So it makes sense to focus on that from the most micro level, at a level which you can practice it most frequently as well. And that means scalping. So, you know, even if you're not a scalper, the best way to get good at trade execution and trade management and timing and get very quick at working with intuition and learning to pull the trigger without hesitancy, one of the best ways to deal with that is scalping. Okay, and you know, to initially start off with, it will probably be with a simulator for most of you guys. You know, even if you want to do it live, start off small and then build up your size. But once you get good at that, then you can start to look at managing the trades a little bit better and staying with them. So we're just focusing on smaller trades at the moment. So let's just focus, for example, we're looking at the crude oil or the Dow. We usually look at a 100 or 200 volume chart. So let's just see what a range would look like. So let's just say this is crude oil. So maybe, you know, what we'll do is mark up the fair value price, which is the middle of the range, the unfair highs, the unfair lows. So, for example, we might say to ourselves, okay, these are the levels. That's where I'm looking to be a seller around the unfair highs. I'm not going to be a buyer near the unfair lows. I mean, I've just taken these a little bit short of the lows and highs. But you know, this is one way you can do it. I mean, you can say that the 1272 extension, that's at the 8094s. So I'm looking to buy that. So you can see how this market is dropping. And what you might do is watch the 8094s and see if there's any resting bids at 94s where you can maybe buy the 95s, 96s to lean on. Okay, on the 94s. Okay, so you know that's the kind of thing you'll be looking at. Okay, when you're coming into these key levels. So this is like these are the setups we usually look for on a sideways market, a balanced market. So what you do is basically just highlight a balanced market and identify a level. So highlight the market is balanced. It's clearly not making high highs, high lows, and lower highs. It is clearly balanced, you know, testing the same sort of resistance levels, testing the same sort of support levels. I often talk about in the trading room how to anticipate the range before it actually develops. I'll be showing you guys how to do that in the room daily. So, you know, learn to anticipate the range so you can actually watch for maybe, for example, like you could be watching this level here, okay, and watching this market actually coming back to those unfair highs and watching for maybe some offers around that level. Now, what might happen, we might break through that level and the offer might actually come in a little bit higher, for example, like here at 84, but you can see, oh, okay, technically we're still sort of holding that level, we're just broken through it. The breakout buys will be here, that's probably where they're getting cut off, and that's where I'll get short. So these are the kind of things you want to look at it technically on the chart itself. Okay, then you highlight a key price level for support and resistance and make a mental note of that price. This price should be your target entry price, and you should look to enter within 2 ticks of that price. Sorry, not price, it's price there. There's a little typo there. For precision entry. So just make a mental note. So what I usually do is make look at my price pane, okay, and I'll actually have a look. For example, there's the unfair highs. I know it's a little bit blurry, but you know, we'll just say, okay, 81.73s. Make a mental note, stick that in your head, okay. Keep that, okay. Take a snapshot of that price, okay. See that price in your mind's eye. You know, we talked about earlier on, okay, bringing up the screen of the subconscious mind, bringing up the screen of the mind, right? And the way you need to do that, okay, is just by sort of visualizing a screen, okay? And on that screen, just visualize this price. Just visualize those numbers, okay? Now, we talked about earlier on, visualizing the number 3, 2, 1, and went into the alpha level. Now, just visualize that price and just keep it in the mind's eye. That way, you'll know that where you want to get short. So, for example, we're sort of broken through that level all of a sudden, 20 ticks. You know that, oh, wait a minute, that trade's gone. You know, there's no point even looking at it. Now, every sort of 5, 6 ticks around that level, you know, it still might look still might look okay. But ideally, these levels, you want to see them holding pretty accurately. Okay, so that's why I like the 1270, 161 extensions. I usually want to hold them quite accurately. The the levels that I look at on my charts, my balance area levels, my unfair highs, unfair lows. I usually want to test those levels almost to the tick. Okay, and that's why I'm watching for the resting bids and offers around that level or just above or below those levels, right? So what you got to do is read the dome, okay, for significant volume of orders that stick just above or below your mentally noted level. Okay, it's real simple. It's not rocket science. Yeah, that's right. They're orders that stick, okay, not just flash up. But interestingly enough, good point there, Terry. What you'll find is generally that's the best ones to go with. The ones that just stick, they're usually real orders. But the ones that flash up real quick, they're spoofs, okay? But they also still do move the market. So even if they don't stick, okay, still watch them, because I mean we saw that earlier on. It's basically, I mean, think of you know, if that big trade on the bid of the offer, okay, was a ghost, right? It's there to scare everyone. Okay, it's just a quick, like you know, they're just saying boo, basically, just to scare everyone. So you'll often see like 500, you'll see it on crude oil all the time. You see 500, 600, 700 all showing the bid, and as soon as it's there, it's gone. So it's never real. I mean, it might just go 500, 600, then all of a sudden it even comes out to 1,000, and then it's gone. Okay, and you know it's not real. But what happens is, in those cases, whenever you see someone like that, you know someone's messing around at that price. So those offers are generally gonna lure in people actually ahead of that price. So people will actually see it, and they will actually try to get in with it. Or just ahead of it. So for example, let's just look at the book right now. For example, this 808 level. I mean, see here, tens. You see the 500 just showed out the tens. So look at the tens. There's 500 just showed out the tens. What happened? It scared the market down about 4 ticks straight away. You guys just see it? Look, it's gone down 10 ticks. So what you do when you see those spooks, okay, I'll call them spooks, not spoofs. Okay, they're spooks. They're spooking the market. Okay, but a good question, Terry. Okay, but you can just see that there's 500 showed there. There was nowhere near the market. But what happened? The market moved about 7 ticks off it straight away. So I mean, I will generally go with the spooks. Okay, I as soon as I see someone spooking the market, okay, not spoofing. In a way, it is a type of spoof, but it's known as spook in the world of my trading. Anyway, this is my own language, but you know, it makes sense for me. They're spooking it. So if they spook it, they usually won't test it. What you'll usually look for is the market to move off it real quick. Say for example, that spook was probably about the 12s there. Okay, but we was trading maybe about 8s or 7s, whatever. Okay, and we didn't actually, we sort of upticked and pushed back down. So you've got to be looking at the market and the way it's moving right now. So let me see my drawing tools, see if I can bring these up. So what you might actually see is the market actually do something like, yeah, you've got to sort of visualize the price action in a way. I don't know if you guys can see that, but it's probably moving real quick. Maybe I can do this. Okay, so yeah, that's moving. So, you know, you'll actually sort of visualize the market sort of do this, come up to that price. As the spook happens, okay, so the spook happens, let's just say the spook happens here. Okay, the spook happens here. I'm just drawing on this here. You guys will be able to see this. Maybe I can change this pen color. Maybe it stands out a little bit more. Right. Let's just erase that. Okay, let's just, I'm going to draw in the top left-hand corner here. So let's just say the spook was, let's just say there's a sort of 1,000 lot just showed here. Okay, and that's at the 8110s. Okay, so 1,000 lot just shows that 8110s here. Okay, and we're trading the 07s. Okay, and let's just say we're trading the 07. What happens is the market is just moving up, and we 07s, that spook it here. Okay, so you see the spook here. Okay, at 8110s. Sorry about the drawing, guys, but this is the best I can do with this pen. Okay, but we only get to the 07s. But all of a sudden, as soon as that spook comes in, you see it down tick. Okay, and go to 06s, 05s. As soon as it down ticks and goes 06, 05, you already know that spook's held. Okay, okay. So what might happen as soon as it goes 07 and it can't go bid at the 07, so it only offers the 07s. As soon as you see that spook, you might hit into the 06, 05 yourself. Get into the 06, 05. And you expect that generally on the spook to come off real quick. If it comes back to 07s again straight away, take your 2-tick loss and get out. Okay? Does that make sense? So the spook is a setup that I haven't actually got here, but you understand what I mean. So the spook is something that you guys want to make notes of. Actually, something that I was going to cover in the next webinar, but in a little bit more detail with some other stuff. But the spookers, actually, you'll find if you look for that trade quite often on crude oil, okay? I mean, not just crude oil, you see it on other markets as well, but it happens on crude oil, the Dow, the Russell even, it happens on quite often. You don't see it that much on gold, but you see it a little bit, maybe now and again on gold. The DAX, it happens all the time. The DAX, I see spooks. That's why I actually look for these markets where I see this stuff, because I love it, and because it gives me an edge. Because if you know how to read the spooks and the spoofs, okay, you're getting an edge. It's not working against you. You can actually have them work for you. And what traders do, there's a massive misconception. They say, oh, they just read news, they read some blogs and say, oh, don't trade with the dome. There's too much spoofing. There's too much algorithmic trading that's screwing everything up. You know, you're going to lose too much money for doing it. And everybody just sort of goes based upon what everybody was saying. You know, try it out for yourself. That's what I did. I actually saw some interesting things and become a leader myself and actually created a way to trade it myself. Not based upon something I've read or done. I mean, I often talk about going against the majority. If the majority is telling you not to trade it, it's probably a good idea to trade with it. You guys understand what I mean? So, you know, it's a lot of guys will say don't scalp. Okay, and we told you to scalp. Okay, a lot of guys say don't trade with the dome. It's too much spoofing activity. We say do it because that's probably where you're going to get an edge. Okay, a lot of guys will say a lot of shit, but you know, most of what you hear go down the opposite route. Okay, we know 95% of traders lose, so 95% of the advice out there is bullshit anyway. Everybody agree? So we saw that spook, and you can see it's already come off. So yeah, do what everybody told you not to do. Basically, that's what I do, and it works for me. Sometimes I think maybe the professionals are paying people to market this so that people don't actually use this stuff. So they're the only guys using it. Makes you think. Maybe they want to be the only ones in the top 10, 15%, or 10, 5%. Maybe they're paying people to put out this information out there so that everybody is misled and looking at the wrong stuff, such as yeah, absolutely, you see it, right? Yeah, so this is the kind of things you see on the dome all the time. Okay, so it's not just about sticking trades, it's about trades that actually show up and spook the market as well. So, oh, Mark, you yeah, it's like shooting fish in the barrel, absolutely. So how does it compare so far to that webinar you paid $4,000 for? probably a little bit different, I suppose. Well, I'm always talking about it. I actually talk about it in the 3-day seminar using the dome, but you know, as I said, I don't have much time to go into it in too much depth. I do talk about this stuff in the 3-day seminar to some extent, but it's always easier when I show you. So where's I need to get my mouse pointer. So now basically, I mean, this is one way. If you're looking for reversals, one of the best things to do is look for that spook or sticking orders, basically, and just above or below your mentally noted level, and lean on the entry. Usually looking to get two ticks within that level. I don't really want to sort of get into a level of resting bids and offers and sort of get maybe short, you know, sort of 5-6 ticks away from it. Okay, I want to get in sort of 2 to 3 ticks. 3 ticks probably max. But you know, you might not get 1 tick below that offer or below that bid that's sticking, or sorry, above that bid that's sticking. You might have to buy 2 or 3 ticks above it or 2 or 3 ticks below it. Okay, or sorry, sell 2 or 3 ticks below it. So it's not you're not always going to be able to get in on that level, but you'll find when it's sticking, sometimes we're not going to go near it. We're going to stay about 2 or 3 ticks away from it. Okay, and you're going to have to visualize, as I said, you're going to have to visualize price action doing as I said earlier. Okay, you're going to have to visualize what price action is doing. Okay, if it cannot go bid just very close to that level, just maybe even 2 or 3 ticks below it, then you know it's still holding. Okay, so it doesn't have to hit it exactly. So that's another important thing to remember as well. Right. Okay. So this is an example of what you might see on the dome. Okay. So this is an example of crude oil. I've just drawn this myself. But you know, this is where you see our guesstimate of the bids. Yeah, five wide depth here. Oh, sorry, 10 wide depth altogether. 8 on the bid. So obviously very low volume on the bids. Yeah, 81.72. So you know, it's not going to take a lot to hit into that and get rid of it. You can actually sell an 8 lot right now and make that market down tick to 71s. So don't let anybody tell you you can't move the market. You can move it to a tick like that. But if you spoof it, you can move it even more. Okay, so now what I don't want you guys to be doing is going crazy with the spoofing with your 100 lots, 200 lots, and ruining this for us. Okay, because we'll always let us know when you're going to do it. Do you put the cumulative depth on the dome? You mean yeah, volume? You can. You mean the volume at price, like market profile? Yeah, you can. I don't use that. I use my market profile. Yeah, on the dome. Yeah. Yeah. I mean, you can look at volume at price. I know what you mean. You're looking to add the. I don't. I only look at this. That's it. Okay, so 81.77s. You can see here, this is where the offers are, 75, 74. So you might lean on, you might not, you probably won't be able to, it probably won't even try to lift the 74s. It probably won't even hit it. So you can see in this scenario, what I would do is actually hit into the 72s. Okay, take some of that 8 lot. Okay, if I want to get in right now, or I might try to offer the 73s. Okay, I might put a limit order at the offer at 73. If I put a limit order there and I'm not getting filled and the market's not going bid there or it's not lifting my offer, okay, I might actually hit the bid. Okay, so that's where you might make the decision. So I might actually initially try to put an offer at 73s, but if it doesn't look like I'm getting filled, I'll probably just hit the 72s. Okay, so that's where you have to make the decision on what to do. But you'll have to work that trade in. So sometimes you might put in an offer at 73s, you might not get filled. You might have to then, by the time you try to hit the 72s, it's at 71s. In that case, you might say, oh, wait a minute, it's 4 ticks off. I might not even want to take that now. But it all depends on other things you're seeing on the chart as well, and the kind of trade you're looking for. If it's a bigger trade, then it might be okay. If you're looking just for a scalp, then it's probably not a good idea. Right, guys. Okay, I'm going to keep going. I know there's some questions and comments here, but I'm going to keep going, guys, and we'll ask questions later. Right, setup 2. So this is now, say, for example, we're getting a pullback trade or a bounce trade, and we're looking to go with the market. Okay, so this is what I call setup 2, the go with trend reversal trade. So it's another reversal trade. It's basically exactly the same thing, but we're just looking at it in a different context. So on the dome, it will probably look pretty much the same, but it's really just the actual market itself is in a different phase. Okay, so it's actually in a trending phase, making lower lows, lower highs, or higher highs, higher lows. Okay, that kind of stuff. So if you find the market is imbalanced, find a trending market with strong momentum, making clearly high highs, high lows, or lower highs and lower lows. And then, okay, this might be an idea. This market's clearly imbalanced. Okay, market clearly moving away from value with lower lows, lower highs. Longer term sellers are initiating new shorts. This is the kind of time where we might use this reversal trade within the direction of the trend. Okay, so what we're looking for is a pullback or bounce to a key trend continuation level, like the 34 EMA, okay, the exponential moving average, or the VWAP, first or second standard deviation. Sometimes we will break the second standard deviations and still we'll actually retest those levels as well. But most often we'll be looking for a pullback to the 34 exponential moving average or the first standard deviations on a breakout or out of value, okay, and balance. We make a mental note. Some typos there, by the way, guys. Just keep you focused. Make a mental note of the ideal entry price level. And this is an idea of where we might be able to do that on a smaller time frame. So, for example, we might be looking at this bounce to the first standard deviation high here. Sorry, first standard deviation low here. So we look to the right, we maybe get an idea. Okay, that's 81.50, so I want to sell there. This is 81.46, so I want to sell close to that level. I want to be waiting for offers, waiting there to cut off these buys so I can get short there and lead on that. Okay. You might see move to the 34 exponential moving average like this. Okay, and I'll often have this labeled so you can actually see it on the price pane where it is. So we'll make a mental note of that level, and then we'll look to see if there's offers there to cut off that demand to actually continue this move downside. So it's exactly the same kind of thing. But really, we're just looking at this in now more of a trending phase.
Now, for significant volume of orders that stick just above or below that mentally noted level, again, and lean on the entry within 2 ticks of that level. So we're looking for exactly the same thing. And this is all we really need to look for. I mean, this, for example, might be the 34 exponential moving average. That might be at the 19s. Let's say the 34 exponential moving average is right at the 20s. And you all of a sudden see 210 offered at the 20s. 21, we also see some offers there that we're leaning on. We might not necessarily see that, but we do in this case, in this example. And we can clearly see the bids are a lot lighter. So, you know, we can be pretty sure that, you know, if we're going to hold this, we offer the 19s or we hit into the 18s, we can pretty much get at least a retest of the 14s because that's where the volume is. So we can probably shouldn't have any real problem getting through 22, 44, 25. Obviously, this is going to be changing. Now, we should be able to get down to here. So as a scalp, I would say, oh, as soon as I see that, maybe there's 99 here, I look to maybe sell the 18s into the 14s. So just take a little scalp and then maybe stop at break even and then hold the rest. You guys understand what I mean? And then maybe hold the rest because this is a trend trade. You probably want to stay with it. Everybody following me so far? Okay, there's only one more setup, okay, that we need to focus on, and it's pretty easy actually. You don't need to complicate it. Phil Blanchard, okay, everybody else is getting it. Anybody else not? Phil, don't worry, Phil, you will get it. As I said, you're gonna have to do it. Okay, you're gonna have to get it. Okay, you're gonna have to do it to get it properly. Okay. So at the moment, you're just taking in information, okay? So don't try to get it all consciously, okay? Just let it sink into the subconscious mind and just take this in, review it later on. All the information you pretty much need is there, okay? So you don't really need to look into it too much. Just start off with the simple concept here. Look at resting offers and bids and watch them. Watch what the market does when it gets those levels and trade off it, okay? And if it looks like it's going to pull, don't do anything. I mean, I'm sorry, get out of the trade. It looks like it's going to pull and you just lean on a level, get out. Just start with basic stuff, okay? Just keep it simple to start with, okay? And then you'll start seeing things yourself when you start watching the book. Right. Yeah, I mean, you can't really trade with a depth of only 2 wide. Nah, Thomas, I don't know how. I don't know which brokers actually offer that. You should have at least a 10 wide depth. Right, so I mean this area here, you see this is what you sort of be leaning on. This would be real volume, okay? Real volume resistance that you'll be leaning on. Okay, so you're looking to rest on that. Okay, maybe short just below it. Now setup 3 is setup 3 is the go with momentum follow through trade. Okay, go with momentum follow through trade. And this is usually, say for example, the market sort of in a downtrend. I'll show you an example, and it's already initiating source, and you've just missed the signal, and you still feel it's still going off. You can actually go with resting offers and resting bids and lean on those to actually get into the trade. All right, Thomas. Yeah, I think a swim is probably not the best for future trading. I think it's good for options, but I've not used it myself, but I've heard it's not that great for future trading. It's okay for, and the commissions are quite high as well. Right. So setup 3, the go with momentum trade. Okay, so you're just going with momentum. With this trade, you just need strong momentum and initiated trade off a key level and a setup. Once a move has been initiated with aggressive trade and momentum and speed, okay, so you want to see the market driving quite quickly off this level. The idea is to scalp the momentum for a few ticks very quickly. Now you can just take a few ticks, maybe stop, break even, and then hold the rest. But just be aware that, you know, quite often you will get stopped out after just maybe a few ticks. Maybe, for example, like crude oil, you might just get sort of 5 or 6 ticks and then come back and stop you out of break even because you are getting in sort of mid-move. But when the moves are real strong and you're moving away from value, even getting in with the trades like this, I do it quite often as well. Sometimes I miss the initial entry and I use the momentum for follow-through trade. I call this a follow-through trade, okay? And I look at initiating activity on the market or footprints and lean on maybe one of those high volume nodes. And then basically get in with that trend. And I often talk about using those high volume nodes to get in for re-entries if you miss the initial setup. So the idea is to scout the momentum for a few ticks very quickly, okay? But as I said, you can stay with it. So this is, for example, you might see something like this. Okay, this market's in a downtrend. This is the YM now we're looking at. So the YM, okay, 7 range footprint. We can see the market's nicely moving lower. So what might happen, for example, is the sellers might come in. You guys see my mouse pointer? Let me just put the spotlight on. It's probably easier. Okay, the sellers might come in around here. Okay, maybe I can draw on this. Probably be easier. So this is where the move started. But let's just say you missed it here. So now the market is trading here and just below this level. Okay, what might happen is the market goes down. Okay, so it does this kind of thing. So let's just see this maybe a line chart. Okay, it goes down. And it trades down, okay, and bounces up, okay? What you're looking for is to lean on this level here, right here. So you're looking at that. So you make a mental note of like, I think that's 60, 74s. Okay, so you already know you want to try and short with initiating activity, leaning on that high volume because others do it, so you can do it, okay? But only in a strong momentum move. The order is negative, okay? So you want to get in with that, okay? And be one of these sellers selling into this. Okay, so what you do is look for, usually with this trade, you want to see a flood of selling coming in as well. It's usually a good idea. Just have your finger on the ready to pull the trigger, okay, as well. And then all we do is move to the next slide here, or not really a slide, it's all one slide. Okay, lean here. Okay, so this we're saying leaning here with confluence on the dome. Okay, so we're aiming to enter here, okay, or maybe just a tick below it. So you're trying to go with the momentum on a move that you've just missed, or maybe you've decided to leave it here purely because there wasn't a real nice setup, okay, and you only really seen the sellers are actually taking control of this a little bit later. Yeah, Mark, you just seen that condition in euro. Good stuff. Yeah, you see this on all markets, okay, but I'm just using the Dow here for an example. So you basically just missed it here, and you see, oh, it still looks like strong momentum. Time of sales, red flooding the screen. You see the initiating activity. You can hear it in the pit. Maybe you want to get on board. And so what you look for is quite simple, again, on the dome. Okay? You might actually, at this time, quite commonly see resting bids trying to cut off such a down move. But what you need to see is if you can lean on the high volume offers, okay, and also that high volume node on your footprints, and then see the high volume bids pulling real quick. Okay, if the resting bids start to stick, okay, obviously be careful. That might be support, so you don't want to sell into that. But if you say, for example, just see a bid show up, okay, and then all of a sudden that bid disappears, in most cases what you see is a spoof, okay, or the flip trade. Okay, the flip trade is when they put in the bids, okay, to try and maybe push this market a little bit higher so they can actually get the bounce into that level like we're looking for. Okay, so for example, you could do this yourself. You could actually put in 200 on the bid, maybe 5 ticks below the current bid, okay, to try and scare this market up a few ticks so that you can actually short at a higher price. You see what I mean? So you know you want to get short, but you're actually showing resting bids below the current bid, okay, to actually try and push this market a little bit higher so you can actually sell at a higher price and get a better price. That's what we call flipping. Okay, and then what they will do, in most cases, is actually push the market a little bit higher and actually then short. So that's what you'll be looking for quite often in this case. One of the best things to do is probably see those resting bids, okay, and then all of a sudden you'll actually see those resting bids around about the same size actually offers just above the current offer. So the resting bids will be there, and then all of a sudden they pull, okay, and then they actually see them on the offer instead. So this would be an example here, for example. Here, for example, these 101, sorry, at the 60s, 70s, okay, 670s, at the 70s here, there's 101 resting here on the bid. Now, what might happen is they will actually pull those bids, and then they might offer the 74s here. Okay, so for example, the market's actually bid ask, the actual current bid ask is 72s and 73s. Okay, but they show the 70s, but they don't. Their actual purpose for showing the 100 lot at the 70s is not to get long. Okay, it's actually to scare this market up to a slightly higher price, so they can actually then offer the 74s and then sell the 73s. You guys see what I mean? You guys understand that? Yeah. So this is another game you'd actually see on the book a hell of a lot. It's usually when the market is moving with momentum. Okay. So what you'll often see is they will actually try to show resting bids to give a false impression that they want this market to move higher and they want to get long. Right. Yes, but how will you see the difference? How will you know the difference? Well, I've just told you, Kelly. I've just told you you'll know the difference because it's going to happen in that order. Now, if the offers are there, and then and they pull, and then all of a sudden the bids stick, okay, and then they show the bids, then you know that they're spoofing the offer. They're actually trying to get long. So it depends on which order it happens, right? And it also, you know, remember, this is a momentum trade. You're only looking to trade in one direction when you're doing this. Okay, you're not going to be looking for this as a reversal. Okay, at a balance area high or low. You're generally looking for this as a continuation of a trend. So if the market is in a downtrend, you already know you're looking for the spoof, okay, or the flip trade. Okay, it's called flipping, where they show the bids, pull their bids, and then offer, and then initiate a short. So you're only going to really be looking at one direction anyway. So, you know, if it happens on the other side, you're not going to do anything anyway. There's counter trend, right? So if this happens in the context of a downtrend and you're trying to trade with momentum and that bid doesn't pull, okay, then you're obviously not going to set into it. Okay, if that bid pulls and all of a sudden that same kind of size, say for example there's 100 on the bid, now there's 100 on the offer, and then the market actually starts to initiate off that, you get in with it. Okay, so wait for the move. Okay, so it's not difficult, Kelly. It's just at the moment this is the different way for most of you guys to trade. Okay, so you're not used to it. That's all. But once you get used to it, it'll be very easy. So don't confuse it. It is what it is. Okay, you don't need to look into it and you know, butt anything. You know, you don't need to butt anything. Okay, it is just what it is. Okay, it is exactly what I've just told you. You don't need to look for anything else. Okay, so keep the butts out and just start trading with it and get on with it and see how you get on. See if it's something you want to use. Okay, it might be something that you actually find, oh wait a minute, I can't make any sense of this and it doesn't work for me, and you just decide to not use it. It's not for everyone. Okay, but for me it's a massive edge, and for me trading is all about getting an edge. Okay, so I get an edge by using this, and without it I don't think I have that same edge. So you either use it to get the edge or let somebody else take that edge from you. Okay. Right, okay, I'm just looking at crude oil now, okay? So crude oil, I'm not sure where we are on the charts, but I've just seen some offers coming in here. But maybe we'll bring up the charts. I know we're going into the lunch break now, but let's just quickly get into market delta footprint. So just give me a sec, guys. I'm just going to bring up the market delta charts. And that's actually the end of the setups here, guys. And so we're going to spend some time on the charts and the actual depth of market now and get moving, okay? So we can maybe take some trades there that we can actually show you. So give me a sec, guys. Right, okay, you can see what I did. I mean, I saw the offers there, but I knew I got in late, so I got out quite quickly. Okay, but still good for $100. So this is what you do when you're scalping. So we'll maybe watch for it to come back again for a better entry, because when you get a poor entry, it's always best to get out and get back in again. So this is scalping though. So I'm watching this area now, just give you an idea. I've took these, now this is my unfair high, this is my fair value price. So let's try and work this range, see what else we had here. We might get a, let's just get a 1272 extension ready as well, just in case. Now, you don't always have a time. If you're trading the diamond itself, it's usually easier to get used to that first, but I like to sort of get it all together. You get so many of these trades on crude oil, so you can often, if you miss one, you can always wait for the next one. So, I mean, the next level, 81.30s, but 81.20s, if we can get a short around that level, that would be good. I mean, obviously, we're just scalping here, but 81.20s, you can see some offers here at 23s. Okay, but watch the resting bids as well. We're testing the 1272. We're testing the first standard deviation high as well. We're just testing it. We're just leaning just ahead of that. Okay, I'm trying to get as close as I can to that level. I don't want to get sort of maybe I can put an offer here. Okay, so this is where I might put an offer in just to short off that level. Sometimes you get filled, sometimes you don't. You don't want to. There's resting bids there. See those bids there? I want to push this up, so I don't want to be short if I'm seeing that. So if I got short and saw that afterwards, I'd get out anyway. So this is what you got to do when you're scalping. You've got to sometimes get in and change your mind real quick and then get back in again. Okay, I might actually hold it in. Yeah, supporting this level. I want to see some more offers. I usually like hundreds or so on crude oil, but you can see there's volume here, right? Okay, ready to cut off this market towards the upside. Now you can be a little bit more aggressive and just get in ahead of this. Okay, you can get in. I mean, for example, if you think it's holding here and you think it's going off now, I mean, you could get in here, and that's a late entry. Okay, and just take, just look for a few ticks off it. Okay, but you're just scalping a level, and if it looks like if it's not gonna come off, I mean, you could always move your stop just one tick above the high here, just above your entry. So if it and just start to squeeze the trade in, so you're minimizing your risk, staying with it. Okay, you're trying to see if it comes off pretty quickly. If it doesn't come off in a few seconds on crude oil, I'm always a little bit wary. We're seeing initiating trade, still seeing offers coming down, still seeing offers, squeeze it down, put the stop break even. Try to stay with it. All right, holding the 14s there. There we go. Another $200. So you see what I'm doing? I'm just scalping off levels. This is how you can scalp the dome. But obviously you can look to, that's one way to do it. Okay, but that's just a quick, easy way. Now what you could also do is just get short and hold it. Okay, and then play off into your fair value price here. So I've just got a short here, but I've just taken a scalp. Okay, but if you're trading off the dome, okay, that's what you guys need to do first. Okay, you don't want to focus on trade management and trade execution at the same time, because you need to keep your focus. So you can see here, my idea was to short here. You guys see what I'm doing? Is this making sense? Obviously, I'm just taking a few ticks. But what I could do, if I don't want to do one in, one out, okay, what I could do is stay with it, okay, and hold that into my fair value price here, okay, and I mean, it's just getting stopped. It's just getting stopped here. So I could just stay with it, take something off here, move my stop to break even, then hold it into the unfair lows. Had I wanted to go for the bigger trade, yeah, but you don't have to, right? So it's L2ST value setup, and I'm anticipating sellers at the 20s here. But not only that, it was backed up by the dome, yeah. There's a couple of other things that was good as well. I mean, obviously the footprint, you got the P formation. So on the footprints, I often talk about the P formation. Yeah, I often talk about this. So that's one way you can scalp it real quick. Okay, so I mean, I'm just taking a few ticks off at a time, but that is it's an easy way to trade, because you're going to risk a very small amount. I mean, if this goes against me and I'm going offside 2 or 3 ticks, I'm out. Okay, so next trade, even if I take another 4 or 5 ticks, I'm going to make it back real quick. Okay, so and you can, if you're trading with this and you've got this edge, the edge is your probability in a way. The edge, the trading with this edge and following what's happening. You need draw. I think what it is, guys, is when I draw on the chart. Okay, when I annotate on the software. See this? When I've just drawn this P, I think that's what it is. So yeah, because I had a couple of marks there earlier, but you can see that P formation, right? So I'll just take that off so you guys can see again. So that's what it was, right? Okay. So now, I mean, the idea was to get into that fair value price and take some profits. But now, if you're looking for the bigger move, I mean, I've missed the rest of the trade now. So, but I just took a small scalp. Okay. So, I mean, it's good. We're just trading on range, but you know, I'm a little bit, be a little bit more sort of cautious purely because it's also break time as well now. So we are trading during the lunch break, but you know, crude oil is still a bit of a wild animal during break time. We see some crazy moves on crude oil. Just have a look where we are trading as well right now. We're right in the context of this, okay, developing value. Okay, look where we are. So let's see if we can get some more. You know, you are going to get some losing trades, okay? You're not going to, I mean, I've just shown you some real good examples. I mean, to be honest, you see them all day long. I could do this all day long, okay, on a 5 lot, and I'd easily make a few $1,000s a day, okay? But I'd much rather take less trades and hold the bigger ones. That's what I usually like to do on the DAX. But obviously, we haven't got a lot of time to hold trades for 2 hours, 3 hours, so hopefully you guys are okay with me just scalping a few ticks at a time. But just giving you an idea for entries more than anything else. Is that okay? But we can always see if it comes off any more afterwards as well. I mean, like this trade here. Yeah, it's still good for you guys to learn. Yeah, you know, as I said, the execution is the best thing, because this is all about timing. I'm talking about entries here, and it's always good to keep your focus and attention on one thing at a time. So if you keep your focus on attention on execution first, timing your entries, once you get really good at that, then you can focus on the trade management afterwards. So that's the way I want you guys to work it as well. Just go for 4 or 5 ticks at a time. Get in and get out. You know, at the first time, you know, you maybe see a reason to get out. It's a beautiful thing, right? Good stuff. I'm glad you guys are enjoying it. Yeah, considering the time of day and the market action, you're doing exceptional. More examples, please. Right, okay. We have to wait for the market to obviously give us what we want. We can't just sort of create trades. Okay, there's 137 on the offer right now. Let's see what happens when the market gets there. Now, that's right in the middle of this range. It's not a key level, okay, but this market might make a lower high here. I don't want to build bad habits, so I don't want to take that trade. Okay, it might hold and actually push back lower. Okay, but it's not the kind of trade I would recommend. Okay, so I saw that offer there, but you know, trading the dome itself, yeah, you might go for that. But personally, could I talk about exits and stop loss? Well, exits and stop loss comes out of trade management, Michael. So your exit, I mean, here we see the offers are still here, but there's 175. Look, this is where it might get the breakout. Look at the breakout might happen now. Look at this 128 on the bid. So this is when you won't look to short it. Okay, see if it was about to short that high, right? This would tell you not to short it. Okay, there was 120 sitting at the bid. That might be a market getting ready for a breakout. Okay, so be aware of it. I mean, let's see if it happens. I personally don't go with a breakout, but I often watch it. Okay. Now, they might pull it, and you might see initiating activity, okay, which it does, okay, pulls, but it still might hold, okay? Be careful whenever you see that. Now, the offers are coming. That guy might have just put those bids in, okay, but let's have a look how many sellers actually got hit. Buyers actually got hit. 156 buyers resting on that bid. 156 got hit here. There's sellers actually hitting those bids. But look, we come back there real quick, okay? Now, what we're looking to do, people will remember that, okay? They'll remember those buyers there, okay? But you'll often find that, okay, happen, okay, when the market is getting ready for a breakout. So it'll be interesting to see whether this high holds again, okay? I see it all the time. Now, it might not necessarily give us a breakout now. Usually we'll see resting bids come in and start to push this up quite quickly, okay? And we get some momentum behind it quite quick. But I would expect this market to at least come back to that 20 and start to retest that 20 level, okay? If it starts retesting that 20 level and we start lifting the 21s, we start lifting the offers at 21s and we get through these offers at not 20s, rather than looking for a short, I'd actually be looking for the long, okay? I would actually forget about the short purely because of what I just saw there. Now, if you miss something like that, it can make a big difference, okay? So as always, you've got to stay in the zone, stay focused on that kind of stuff because you could miss it. Okay, so look, I mean, it's already holding support. Okay, so those offers there are not holding. Okay, I mean, even though that bid got broken, okay, they got hit, it still holds. I don't know why, but it does. Okay, it's just through experience. I found even when resting bids get taken out, buyers come back below it. You can see someone trying to bid this back up again to the highs at the 15s and 16s. The bids are taking this back in the high. So we can see if you're looking at the footprints alone, you'll be saying, oh, sellers are hitting the bids. And you have no idea why it just came down to the 17th and just come back up, right? But if you're watching the resting, if you're watching the dome, you know exactly why it just happened. You see, now we're at the 20s. If we get through the 20s and we get through all of those offers and start lifting the 21s, the breakout is more than likely going to happen. But at the moment, it might not. We might actually see this market still. We come back to the 20s and actually holding it again. Now, if we see loads of, I mean, if I see like 2 tiers with offers, for some decent offers, now, for example, if it's a 20s and 21s with loads of offers came in, 100 lots, 200 lots come in, then I lean on that. But at this current moment in time, I'm a little bit curious because 15s, there's bids coming up here. Okay, so I know even if this move does come down, it's going to come off very quickly, only for a few ticks, maybe to test that 15 level. Okay. So, I mean, you could try to lean on these 19s and 18s and play off into that 15 as well. I mean, I could actually do that right now if I get filled and play off into that 15, take a few ticks, because I know it's going to happen. Oh, damn, I got filled. Right, I didn't want to get filled here. So what I want to do is get out. Well, I could just get out of break even. If you make a mistake, get out. Just get out of break even. So what I was going to try and do was get the 17s and try to trade it into the 15s and take a couple of ticks. Okay, you guys see what I mean? If you're just scalping, you can do that. You know, on 5 contracts on crude oil, you know, you're still paying $50 a tick, and that's a quick $100. You know, even after commissions, it's still some decent money. You know, five contract. You know, you might pay on average what, $4 round turn on 5 contracts. Yeah, you still make your $80. Still adds up. If you get these small little incremental pocket profits, it does add up. Now, guys, I'm going to give you a little sneak peek into something else, right? I mean, I could actually stay the short and stay with this as well, but I'm going to give you a sneak peek into something else, okay? Because we haven't got much time. So I will spend some more time doing this in the trading room. We're looking at, and this actually seems to be working pretty well. Last time we tried this on the Dow, my trading platform was completely off. My trading platform was lagging behind my charts massively. So you know, you guys got a good idea of when I was getting into the trades. But what we're trying to do is get this into the room more often, so that when we actually trade an account, you know, just with just trading these accounts, just these setups on these trades and trading them together. What we're trying to do in our trading room is set up something more like a sort of a sort of learn as you earn environment, really. So you guys can sort of trade along what I'm doing, basically. So I sort of try and show you the trades as they're setting up on the day of the market order footprints. So that's what we're looking to do. So that'll be coming up really. We'll be doing that within the next few weeks. So that'd be things will be getting better in the room. Let's just put it that way. Yeah, seminars will get better and better. Every 2 months we'll be doing these seminars, and I'll put something together every time. Now I'm going to show you something, right, guys? I'm going to just unshare my screens. Okay, let me just show you something. Now you guys got to remember that this is something that I'm testing. Okay, and now some of you guys would have come across this software before, but I'm only using certain aspects of it. Has any of you guys actually heard of Future Scalper? It wasn't actually, you couldn't use it before with yeah, you have. You probably will have done. I mean, you can check it out. The guy's got some videos on Future Scalper. He's actually got some videos on YouTube. Go to futurescalper.com. Now the software is about $1,500. Now I went for it even though I didn't know how I was going to use it, but the only because it's very different to anything else out there. So you can't test it either. You can't take a trial. So I actually paid for it to just test, basically. But you know, I thought it was a worthwhile test. If it's something that can analyze the depth and give me leading indications of a certain move from key levels, it's worth $1,500 for the year, even if it doesn't work. Right, so for me, it's a worthwhile investment. So I know not everybody is, has that kind of mindset of willing to sort of just throw $1,500 away at something that doesn't work. But for me, it's something that I'm actually willing to sort of watch to see if it works. I mean, there's 500 or so showing on the offer here, guys. So let's just see. It was just showing at the 20s here. Be interesting to see what happens at the 20s right now. I mean, I wouldn't personally take a trade on it, okay? But there was 500 show at the offers there. Be interesting to see what happens there. No, yeah, I'm going to show you guys in a sec. Let me just get the contracts up. I've got to log into this. Okay, there was a pretty short move there, guys, but I could see the bids coming in. But those offers that came in actually got pulled, and we're actually getting through them because bids actually showing up. You can actually see those bids coming in at the 20s again. Okay, so we might be getting close to the breakout, so just be careful with that. There's some offers at the 26s now, but I'll show you that in a sec. But what I want to show you is a quick sneak peek into something. Is the screen still dark? It should be all right now, guys. Right, come on. Why is this taking so long? All right, maybe I'll put in the wrong password. Well, basically, this links into you. If you've got a Transact account or Transact broker, you can use that data feed. You can only use the Transact data feed. All right, guys, watch this. They're lifting the offers big time. Okay, the breakout's happening. Do you see the breakout? You guys see the breakout now? You guys see it? Yeah, if you guys are watching crude oil, you'd probably see the breakout. Okay? Yeah, you see the breakout now. So, I mean, obviously, we've got a heads up that a breakout might be coming soon, and it just came now. But again, I just said, they were bidding the 120s. and it's actually now 30 ticks higher. Sorry, 10 ticks higher, 30 ticks higher. But breakout trades can often only last a few minutes, and then it pulls back, or a few ticks. Usually on crude oil, you'll often get sort of 10, 15 tick breaks and a sort of a pullback, and then it comes back. Come on, what's happening with this white and this logging in? Right, okay, let me just try again. For some reason, it's not logging me in. Alright, that 1272 extension is at the 30s. That's just being tested now. You can actually see that holding right now. Well, being tested anyway. Come on, log me in. You can switch this from Sim Trader. You can actually trade from this platform. So I can switch it to live just by clicking this, or I can switch it to Sim. I can do either or. Okay. Now, I can actually trade from this as well. It's actually got virtual limit orders as well, which are basically orders that you can put in that actually has conditions set. So it'll only fill that limit order if the market has a certain condition met. So, for example, there's a couple of indicators that we can look at. You can actually say it's only get filled if maybe a certain amount of volume actually trades on the bid or the offer, and it won't pull the trigger unless that happens. So virtual limits is something unique to this software. I've never seen it before. So you can actually set conditions for your orders, so you will only pull the trigger in the most prime conditions. So you can actually leave an order at a level, and it will take the trade automatically based upon order flow based conditions. So which is pretty unique. Everybody see this okay? Yeah. Right, so I'm not looking to sell this software or anything. There's nothing to do with me, okay? I'm just showing you because I'm purely looking at this, that's all, okay? Now, what I want you to notice here, the most important thing, I mean, we've got this visual display of the depth, which is one thing. The only thing I'm really looking at here, I mean, this is all quite confusing, but I mean, these bubbles here, these little circles are just basically showing the aggressiveness of sellers hitting the bid, buyers lifting the offer. There's a hell of a lot this software can do. You can actually analyze market makers and locals' risk and basically how much money they're making based upon certain trades and stuff like that. There's all sorts it can do. I don't use any of that, okay? Yeah, so you bought it, right, Phil? But you didn't understand it. So you bought it. They don't lease it anymore. I don't think you can only buy it for. I think you lease it for a year. That's it. So yeah, I bought it. Obviously, I mean you can't try it anyway. You have to buy it. You have to try. You have to buy it to try it. So there is no trial. So this for me, you have to. It's a $1,500 trial. So basically, I mean, you know, there's a few good things. I mean, you talk about taped tweet. You can actually have sounds based upon big size, buying and selling. Okay, but I'll tell you what I'm using. Okay, I'm using these two indicators. Okay, there's the VAR and the ACT. Okay, now I mean those are really the only things I'm looking at. So I'm just going to minimize the rest. I'm just going to sort of show you this. Okay. Oh, damn, I've just closed it. Let me just open it up again. So what I'm looking at is the ACT and the VAR. Now, you can display these on the chart as well. I mean, this is just basically the current bid-ask spread that's being traded, and you can see which way the market is trying to move. Now, what I find, okay, this is basically the ACT is the ACT indicator, okay, so it's an indicator based upon spoofing activity. And the VAR is also a spoofing, and it reads sort of the variation of resting bids and offers. Now, if buyers and sellers are putting on orders on the bid and the offer really quickly, it analyzes the speed of orders sort of coming in and out on the bid and offer, okay, as many tiers as you like. And I can actually choose which tiers I want to analyze. So I can actually say I want to use you can only analyze up to tiers 5, but the main tiers we want to analyze is tiers 1, 2, 3. Okay, that's generally where the spoofing occurs. So what we're trying to do is read spoofing activity for possible market direction or for a particular level. So one of the things we can do is the ACT indicator. Okay, actually it follows spoofing. So it's watching bids and offers and the size of the bids and the offers resting on those tiers that I've defined, right? Tiers 1 to 3. Now, the idea behind this is that if spoofing is occurring below the current bid, the market should move higher. If spoofing is occurring above the current offer, the market should move lower. But it's reading spoofing activity every millisecond. So it's so quick. It's reading it so quick. So it can move very quickly. Okay, but what you'll often find, I mean, we got it sort of averages based upon spoofing activity here. So this ACT indicator and the VAR indicator basically give us an idea, based upon spoofing activity, which direction we should see this market going. Right? So, for example, we might actually, if you see this here, this ACT, it sort of drops and pushes higher. It's been slightly sort of edging higher, and you can see the price is just sort of starting to lift off slightly. Okay, but what I look for on this, that I've actually found is actually quite significant, is when we get a sudden movement on spoofing, okay, in a particular direction on this indicator. And I'll show you guys at the trading room, okay, in next week, in the coming weeks. So I'll bring this up in the trading room and we'll watch it together, because I'm still testing it myself, and I don't rely on it fully. I will just take the trades based upon things that, see here, this ACT has just dropped, okay, but now we've got to look at where the market is as well, okay, but you can see it just dropped really quickly. So you want to see if now this price starts to drop, okay, so it's a leading indicator. Okay, you want to see if this price starts to drop. Okay, so you know, you want to see follow through here as well with this, but you know, you want to see maybe spoofing activity giving you a heads up of what happens. Okay, sometimes it's going to move in tandem, sometimes it's going to move you know, often you'll find these depth analysis tools will give you a heads up before price moves. It's usually just a few seconds before the market moves. Sometimes a little bit longer, but most cases on crude oil, it's usually sort of a few seconds before the market moves. Now it just dropped slightly. I mean, that's just a couple of ticks it moved down, right? But now, I mean, it's really just choppy at the moment. It's not kind of the information that I would use, but I can still see this kind of sort of edge lower, and you can see prices dropping. There you are. Yeah. So as a heads up that this price should drop. I mean, obviously price dropped a little bit as well at the same time this dropped, but it only moved down a couple of ticks. But usually what I find is when this happens, it moves, you know, the crude oil moves anything from 10 to 20 ticks, okay, most of the times off a key level. So there's certain things that I'm actually watching for. I don't want to go into that too much, but this is just a sort of quick introduction to what I'm looking at. But the only way to sort of figure out how to use this kind of stuff is to watch it and observe yourself, because there's no real sort of right or wrong way to use it. I'm just observing this day in, day out, looking for certain things happening that actually move the market. Okay, and obviously getting heads up on particular moves. I mean, there's a lot of times I talked about in the trading room the other day where we were just testing support, and you know, you might be looking to buy that support, but then all of a sudden I saw spoofing activity is trying to drive this market down. So I see the spoofing market activity trying to move this down. I know I don't want to get long counter to that. You guys understand? It's all, in most cases, Mark, do I see it lead sometimes? In most cases it's leading. You have to understand how to read it though. Okay, if you're just looking at just little minor movements here and there in a choppy range, it's going to do fuck all for you. Excuse my French. Okay, but if you're looking for, there's certain ways to use it. Let's put it that way. You got to get used to it. I mean, it didn't happen for me overnight. And you can see this is just pushed up, but it's starting to edge higher. But it's the way it moves. Okay, I'm not going to go too much into it, but it's the way it moves. It is a leading indicator. I mean, I saw that drop there. I mean, I saw this push up here. You already know this market's about to push up. Okay, now for scalping, it's pretty good. I mean, the VAR is probably not as good as the ACT. I like the ACT on the turbo for scalping, but I mean, I'm not looking at any of this other stuff. I'm only looking at this indicator. I tell you what I'm looking at, just this. Okay, I'm just looking at this. So I'm just looking at this. You're getting queasy just looking at this screen. Well, don't look at it, Jim. That's it. Simple as that. Okay, I'm just showing you what I'm looking at. You don't even have to look at it. You don't even have to bother trying. Okay, I'm not expecting any of you guys to start using the same thing. It's just a heads up. I'm showing you just something that I'm looking at. That's all. Okay, you don't have to use it. You don't have to use anything that I use. I'm just showing you what I'm looking at. Okay. So yeah, absolutely. I mean, that's where the edge is, Mark. So the question is, you're finding an edge, seeing the market going with the spoofing, then looking for an opportunity to fade. Yeah, I mean, that's what we're looking for on the book as well. When we're reading the dome ourselves, we're looking for spoofing activity, okay, to drive the market in a particular direction. But this is a real complex. I mean, if you ever had Brent, the guy that's developed this software, try to explain this to you and what it's looking at, it's bloody complex. Okay, it's looking at a hell of a lot of stuff. It's looking at a lot more than we could possibly ever look at to explain what's happening. The colored lines are just averages. I mean, one of the things I look at, I mean, if you're looking for a key move to sort of go, I mean, I like these kind of drops. You see this kind of drop just will happen real quick. I like these kind of drops, okay, as heads ups. But I want to see everything else come together as that as well. But if I see it and I'm just about to pull the trigger anyway, if I see this next to my dome and I'm about to pull the trigger anyway, I'll go with it, okay? So the developer is Brent Fry, his name is, Future Scalper. Go to futurescalper.com. But he doesn't provide this to anyone. So I mean, I wouldn't. I mean, if you're interested, you know, you'd probably have to have an interview with the guy. He generally wants to know your background and what you're trying to sort of do before. He doesn't just sell it to anyone. So, and you can't even just buy it through his site unless you maybe drop him an email and want to talk about it. I'd say, I mean, the best thing to do is probably just watch it in the room. I wouldn't say sort of invest in it yourself straight away. I mean, I might decide to never use it again. So, you know, save yourself 1,500 quid. Let me test it out, and then I'll let you know whether you need it or not. Simple as that. At the moment, I'm seeing some interesting things. There's definitely a hell of a lot more to it, but I just want to continue doing what I'm doing already, and just, you know, there's certain things on this that I'm using that is just making it easier for me to sort of identify certain things. It's all about just getting an edge. It's just innovating, really. You know, that's all I always do. No, not really. You just buy it. You don't really. You can get training. It does explain some stuff. But I tell you what, I mean, if you do get you have it explained to you, it's very confusing. I mean, Brent's style of trading is very different, and his guys will probably be looking to do. So we have to adapt the tool to use in line with our style of trading. You know, what the kind of trading you'll probably be taught by the tool. By Brent is not what we're doing. So it's very different to what we're doing. So I just want to do what we're doing and use this more as a sort of like a super indicator more than anything else. But you know, it's optional. I'm just looking at it. I just love innovating. I love always looking for the next edge. You know, I always want to improve my edge, and I just see how it goes. You know, so just letting you know, this is what I'm looking at, and there's a couple of things which I've been finding quite interesting. And you guys will also see that in the room as well. I'll show you as we go along how I'm using it and some of the things that we're looking at. You know, we'll also look at it together. So, you know, we'll just reserve it in the room. So from, you know, next week I'll just bring it up in the room. We'll have it up next to my market dollar charts, and let's see if something interesting develops from it. So, you know, as I said, I might. There's a hell of a lot the thing software does, but I don't really think you need to confuse it. I just want to make it simple. I just want to use, maybe if there's an indicator that can show me visually what's happening on the dome, I like to look at it. That's really what I'm looking at. This is just really visually showing me what's happening on the dome in a way. I mean, we can see some spoofing activity now, saying that this market this is just balanced. Okay, the market is just moving sideways. I really like to use this when we're sort of in a more of a momentum move. Okay, so yeah, that's right. I mean, if there's a lot of spoofing activity on the offers, not just spoofing activity, a lot of variation. Okay, so for example, let's just have a look. I mean, the VAI actually shows that. You'll actually see this bracket that's here. You see these brackets, this white and purple bracket here. This is actually, I mean, in a way, is actually, you can actually switch this on. There's an accumulation. But you can actually see the accumulation of volume being spoofed at each price. What it's looking at is bids and offers entering and leaving, entering and leaving. So if the orders are real, it's going to stick, right? They're going to stay there. But if orders are just coming in, leaving, okay, on the bids and offers, generally that's what you find is happening. The spoofing is happening all the time, okay, on a real micro level, okay. I mean, for example, like here, there's more spoofing on the downside, on the resting bids at the moment. So if it's going to switch very quickly, if you're trying to read that, that's going to make it really quick. I mean, difficult to sort of read. But what this indicator does, you can see it's dropping. Okay, so it's indicating based upon that spoofing, this market should drop. Okay, and it is dropping. Okay, so a lot of the time it will be in line with price. Yeah, the black dotted lines is more the leading indicator. The others are just averages. So I really want to see it all sort of come together, really. But yeah, I mean, a lot of the time the price will move and this will move with it, which is not obviously useful, because we can just follow price then. But what we're looking for is the times when this moves ahead of price, and then price looks like it's about to follow. That's what I'm looking for, right? So it's not going to be all the time. But if you see that you're at a level where you're looking for a trade, and support resistance is possibly holding, and this starts to move ahead of, starting to move higher all of a sudden, for example, off a key level before price does, and then price starts to edge in that direction, you probably want to get in with it. Okay, I mean, this is just a sort of a quick introduction to it, but I'm not going to spend too much time on that. But anyway, guys, hopefully you enjoyed it. I think we've gone way over time now, and we could keep going all day long, but I think it's good time for everybody to have a break. And what's the time now? Okay, it's 5 o'clock. We usually have the break at 4:30. So, well, I mean, I don't know how you guys doing. Do you guys want to do the afternoon, or should we just have an afternoon lunch? Sorry, afternoon. Should we just finish off for the day? I don't mind. Or we could keep an eye on this later on, and we'll maybe watch a Dow or something. Yeah, finish off. Okay. Yeah, got to rest. Good stuff, guys. Not a 5-minute break. Right, okay. Well, what I'll do, we'll just do a little bit later, because I've been talking for quite some time. I need to get some food and have a break. So some of you guys have to go. So if you want to stick around, obviously the usual trading room link. Okay, we're not going to be using this link, the normal trading room link. We get into that. Okay. Into the normal trading room. So I'm going to close up now. This webinar is going to finish off, and I'll open up the room, let's say in an hour's 6:30 GMT. So that will be, give us about an hour and a half until the break. Until the close. So yeah, we'll have an hour and a half into the close. So let's just go into the afternoon, and maybe we'll focus a little bit on the Dow. Okay, and we'll watch the book on the Dow. Yeah, doing exactly the same stuff into the afternoon. Right, so let's have about an hour, 15-minute break. Okay, so I'll open up the webinar for 6:30 p.m. GMT, so in an hour and 15 minutes. Okay, an hour, 15 minutes, I'll open up the trading room. Use the normal link, guys, normal link for the trading room, and we'll do the afternoon on the indices, on the Dow and the S&P. Actually, maybe we'll have some time to look at the ES, and I'll show you the difference between the bids and offers on that, on the book, on the S&P. All right. Good stuff, guys. I'm glad you enjoyed it. I told you it's going to be worthwhile. So now you all guys have my edge. All you guys now have my edge. So use it well. Don't ruin it. We've got to make sure it keeps working.